This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Coming out of a long weekend, hopefully everyone's rested and raring to go. I mean, we're also, by the way, saying goodbye to the last financial year and looking ahead into the new one. The last quarter gone, looking into the second quarter calendar 2024. So lots to talk about. This is, of course, also the election season. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Good morning, Nigel. And lots of cues to track this week, right? There's the RBI policy. There's also the US March jobs report that comes out on Friday. So we have our hands full and all the celebrations are now over. So back to work.
Well, welcome back, guys. It was good to have you all back and plenty of action to catch up on. So let's get straight to it.
Absolutely. And, I think we'll, the big question to really ask is whether global markets and generally the sentiment out there will remain as benign in the second quarter as it has remained in the first quarter. I'm talking about January to March. I mean, that is behind us now, and we are looking into the second quarter calendar 2024. I'll get to that in just a bit. But, just to start with what's most important, right? From a global perspective, top down, you had Fed Chair Powell who spoke, and he sounded dovish once again. This is, of course, at the end of the close of last week. And this is important. So he unequivocally dismissed the strong inflation readings for both January and February. You might say, well, we heard the Fed commentary at the FOMC meeting, right? So what's the big deal? But the point is, after the FOMC, we got a couple of more data points which indicated that data is stronger than expected, right? But there was no real heed which was paid to that in any significant way. So the message from Powell, and he's, of course, boss man at the Fed, is absolutely dovish. Just to sort of add to that point, one of the data points we got, the last one, and this is important from a Fed action perspective, is the core PCE. They watch it very closely to determine where inflation is headed. And month on month, that came in at about 0.26%. There was a slight upward revision to the month of January. So this was largely in line. But since Powell was speaking, he reacted to the data point which we got that day. He said that the Fed PCE is more in line with what we want to see. He kind of said, well, we're okay with it, and it's proceeding in the correct kind of trajectory. On the other hand, in sharp contrast, just one day before to when Powell spoke, you had another gentleman from the FOMC. He's a voting member who said it would be prudent to hold rates at current restrictive stance, perhaps for longer than previously thought. So you can see very clearly there is a bit of a divergence which is emerging within the FOMC as well. Those who believe that rate cuts will perhaps start, there'll be 2 cuts according to the dot plot, and those who believe that perhaps higher for longer is what is needed. And as I said, the big question amidst all of this is this, whether the Goldilocks kind of situation, which is, inflation which is perhaps holding high but expected to come off, and that kind of fosters expectation that rate cuts are perhaps just around the corner. And that's a perfect kind of nice scenario which persisted through the first quarter. Whether that will continue, or that perhaps that will be at risk from higher inflation and high yields as well. We'll find out. Just near-term action, right? On Friday, not very much. Nasdaq was down. This is Thursday, sorry. Nasdaq was down about 0.12%. The 10-year yield at about 4.21. The dollar index, of course, ended at about 104.5. Absolutely flat kind of close. The market here, I would say, will see a bit of a make or break week going forward. This is largely because we've, the correction that we've seen from the middle of January, that has largely sort of been, we saw a correction and the markets pulled right back. Thursday, the price action was pretty interesting. From the highs, of course, we came off very sharply. But on the Nifty, we came within 10 points of 22,526, which is the all-time high, right? So the immediate task for the Nifty will be to cross that level once again. And then, of course, we're all set. Support stands at the 40-hourly exponential moving average, which is at about 22,152, about 150 points away from where we left off. The Nifty Bank, it broke above 47,270, which is the 61.8% retracement of the full decline. But we did not close above it because, of course, in the second half of the session, we had that sharp correction. This is Thursday's session. The immediate resistance for the Nifty Bank will be Thursday's high, which stands at 47,440. As we begin this new week, I mean, I think I think there's nothing to indicate that the sentiment should turn sharply negative or anything. Perhaps, if one were a betting person, one would say that the correction which we saw from the middle of January to the lows that we had, perhaps that is behind us. Nothing very large, but we kind of look up rather than down from here on. The GIFT Nifty is indicating about a 40-odd point higher start. Sonia.
Okay, so it's going to be a good start, right? But today is also All Fool's Day, April Fool's Day. So you don't know if that's the way the market is going to shape up or not. But no, jokes apart, I mean, it's going to be a good start to trade. And it's been a really good, quarter for the market. If you just look at what's happened, right? I mean, in Q1, we had the US markets, which gave you phenomenal returns. The S&P 500 in one quarter was up 10%. The Nasdaq was up over 9%. The Dow was up about 5.5%. Big moves coming into a lot of these generative AI-related stocks as well. So we'll keep tracking that. The US markets, in fact, saw its 5th consecutive positive month of gains in the month of March, that is. And all eyes will now be on what happens in the next couple of weeks in terms of data. You have the March jobs report that comes out on Friday as well. So we'll track that very closely. Apart from that, for our own markets, there is the RBI policy. Don't expect anything much from the policy. It comes out on Friday. No change in rates expected. But there are some analysts or experts that see the possibility of a change in the stance. There could be a surprise change in the stance to a neutral to prepare for the runway for rate cuts going forward. So that's something that perhaps you can expect. The Nifty has had a smooth run. It has recovered all of what it lost. It's up 1.5% in the last 5 trading sessions. And I'm also watching out for the auto stocks today because the auto sales for the month of March will be out. Now, the broad trends are that two-wheeler sales growth will be very strong. However, the passenger vehicle growth has slowed down and the commercial vehicle growth continues to be on the weaker side. So it's going to be a mixed bag this time around in the month of March. But what are you watching out for? Lots to track this week.
Well, that's right, Sonia. As you all mentioned, right, we're kickstarting a new fiscal this year. So, last year was actually very, very splendid. But just want to warn our audience that last year was actually special. You can't get this sort of a performance on a year-to-year basis. So last year, you did see that the broader markets did an big outperformance. The Nifty Bank, that was a relative underperformer. And that's the one that I'm tracking. And that's going to be the near-term driver of the markets. I'll tell you why in just a bit. It was up only around 16%. Today, volumes could be a little bit tepid because there's a clearing holiday here in India. And globally, some markets are shut as well because of Easter Monday. So volumes could stay a little bit tepid. Now, the Nifty open interest actually is a little bit lower at the start of the series. But if you're looking at the market-wide positions, well, it's as high as can be. So the market-wide open interest continues to remain at record highs. The Nifty open interest, though, is at relatively lower levels. And the Nifty Bank rollover was relatively higher in comparison to the Nifty. So that's the one that I'm going to be tracking. The big cues for this series itself will be the earnings. You'll be getting, the RBI policy and also early trends on the monsoon as well as general election. So those are the top factors you need to track. What are the FIs doing? Well, at the start of the series, they're not as net short as what we saw maybe in the prior series. So the net short positions are only around 24,000 contracts on the short side. March as well as February, well, the net short positions were far higher. So there are not too many shorts in the system, but sometimes is a blessing in disguise. On Thursday's trading session, what was good was finally the Nifty and the Nifty Bank, they managed to climb that 20-day MA and conquered it on a closing basis. So that's encouraging, though we came off the high point of the day. I'm looking at the options data, 22,300 put as well as the 22,500 call. Well, both of them were fairly active. And just looking at the options data and taking into account the technical factors as well, it appears the market is in the range of around 22,100 on the downside to around 22,600 on the upside, going by this options data and going by the technical levels as well. If the Nifty needs to move higher and it needs to make record highs, well, it's going to be rather important that the Nifty Bank participates. And those, from its all-time highs, it's still away close to around 2.5% or thereabouts. So that's the crucial number you're looking at. The Nifty Bank is going to be the driving force. The rollovers are relatively higher, and it's been an underperformer the past fiscal. So keep an eye out on that mark as well. The stock that I'm tracking today is Nalco. Well, we did see it conquer the 20 as well as the 50 DMA, ended closer to those levels on Thursday's trading session. It's still more than 10% away from its, from the 52-week high. And also, fundamentally, aluminium prices have been strong. And also the Chinese data that we got over the weekend, the PMI data, well, it was relatively better in comparison to what expectations were. So I'm keeping an eye out on Nalco, technical factor playing out, and there are some, triggers with regard to aluminium price move as well. So that's the one I'm tracking, guys.
All right, Nigel, that's an interesting kind of sort of cohort list of things to watch out for as we begin the second quarter of this particular calendar. Before we get any further, let me quickly tell you what's lined up here in the first half of the show today, the first half hour of the show today. We'll get you updates from markets across the globe. Peter Cardillo of Spartan Capital Securities will be joining in with exactly that in just a bit. We'll get our research team to tell you which are the top stocks to watch out for the day. And at about 8:30, we'll get a fundamental stock check done with Prakash Diwan. We'll ask him what he likes in this market.
All right, there's a lot to track actually as we kick off trade. On the equities front, we have a comment coming in from Sunil Kaul of Goldman Sachs, who says that India offers the best long-term growth prospects in the region and a resilient macro backdrop. He says after 20% earnings growth last year, he expects 16% earnings CAGR in 2024-25, which will be the best growth in the region after the tech-driven cyclical recovery in South Korea and Taiwan. He thinks valuations are likely to remain rich given the strong earnings delivery. He expects the Nifty to reach 24,500 by the end of March 2025, which implies 11% price, 15% USD total returns. Driven by earnings, he favors domestic sectors and is overweight on autos, industrials, utilities, telco and insurance, and he raises his call on IT to neutral. That's interesting there.
All right, Peter Cardillo is with us. He's Chief Market Economist at Spartan Capital Securities. Peter, good to have you with us here. Good morning. Thanks very much for your time. We've had a very nice sort of Goldilocks kind of market in the first quarter. Will that continue into second quarter? Do you see anything changing at all?
I don't see things changing very much. Obviously, we're going to be heading for the earnings season, and I think for the most part, earnings probably will come in within market expectations. And the fact that the PC price index came in line with expectations, and the key obviously was the year-to-year core rate inflation, which stayed unchanged at 2.8%. And that's good news because I think, we can expect inflation to continue to move lower. And what we saw in the December, January months, I think can now be considered a blip. Maybe a month ago, we were doubtful about that. But now we think that, yes, inflation is coming down. Of course, there's always the wild card, and that wild card is if energy prices should begin to move much higher from these levels and stay there, then that would be a problem. But I was very much impressed with the fact that Powell on last Friday, he basically stayed to his script and was somewhat on the dovish side, and he continued to say inflation is going in the right direction, but we need more evidence of that. And so I think, that's probably going to rekindle the June rate cut. And that's why the market is going up. And if you look at gold prices today, making new records, that's part of it.
All right, gold prices making new record highs, got that. But how are you feeling, Peter, about the Indian economy now? Because growth has been picking up. In fact, we have the RBI policy coming up this week, and the expectation is that there won't be any move on rates, but there could be a change in the stance to neutral, preparing for rate cuts to come in this calendar year. Your thoughts?
Yeah, well, as far as the Indian economy is concerned, I'm bullish on India. I think, it's catching up to China. And maybe it might actually surpass China over the next year or two. And if that happens, it becomes a powerhouse. And so I think that the Indian economy will continue to do well. Obviously, in terms of interest rates, the central banks, that is the global central banks, basically are all on the same page, and they're all looking to cut rates at a time when they feel that inflation has gotten under control. So yes, I'm bullish on the Indian economy.
All right. Hi, Peter. Good morning and good to see you. And I recall when the last time you joined us, you said that China has structural issues. So that's why you prefer India. and you're sticking to that. But in the near term, do you believe that there could be a case that you go tactically overweight on China, or would you say no, it has too many issues, you'd rather not go down that path? And also, I just want to reconfirm, how many rate cuts are you factoring in from the Fed?
Well, to be honest with you, up until we got the PCE price numbers on Friday, I thought we were going to get only 2 rate cuts this year and possibly even 1. But now that I see the year-to-year core rate staying at the same needle, then there's a possibility we'll get 3 rates. However, there's another scenario to that. And that scenario is this. The Fed, could cut only twice this year, but instead of cutting 75 basis points by a quarter of a point 3 times, they may just cut 50%, and by 50 basis point, and then follow by another 25 basis points, which would give you your 3/4 of a percentage point cut in the course of the next in the course of the second half of the year. However, again, so that would be a scenario if, let's say, inflation remains elevated and the Fed decides not to cut in June, then that means that in September they could cut by 50 basis points and then 25 just before year end. And that would make up the 75 basis point that the market is talking about.
All right, we'll leave it at that. Thanks a lot for joining in. Appreciate your time here on CNBC TV 18. Let's take a quick break on that note. On the other side of the break, our list of top 10 stocks is lined up with our entire research team. Stay with us. Welcome back to Bazaar Morning Call. Let's begin the day with a lot of stocks in focus. First up, Infosys on our radar. Rima is here to tell us why. Rima, over to you.
Hi, good morning, Sonia. So, they expect a big tax bonanza for Infosys. The company's announced over the weekend that they're likely to get a tax refund amounting to 6,329 crore based on an assessment for many years. They've also said that there is likely to be a tax demand for some other years, which totally amounts to a little more than 3,000 crore if you include the subsidiaries. So, as of now, the company has indicated that they're still in the process of evaluating the net benefit, but I think the street is going to be, quite excited with the prospect because at least based on the numbers they've shared with us, the tax refund of 6,300 crore is much higher than the expected tax demand of a little more than 3,000 crores. At least net, you could expect, a tax benefit or a tax refund of more than 3,000 crore rupees. So the street could be very excited with this prospect. Back to you.
Okay, all right. Thanks a lot for that, Rima. Well, let's hop across to Ekta. She's tracking Lupin. Ekta.
Thanks for that. Well, Lupin has received the nod for the generic version of a drug called Aptium. It is going to be manufactured at their Pithampur facility. The drug is used for seizures and the estimated sales are around $354 million. Lupin has said that they are one of the first ANDA applicants for it and they could be eligible for 180-day shared exclusivity on this drug, and hence it could have a significant potential for them in terms of the overall US sales. Expect the stock to be in the green on account of this.
All right, Ekta, thanks very much for that. Well, HAL and Torrent Power both have got news flow. Upasana is here with that. Upasana, morning.
First up is HAL. The company signs a contract worth almost 1,173 crores with Cochin Shipyard, and the contract is mainly for the supply of sets of gas turbines and GT auxiliaries for Indian Navy for its NGMV project, that is mainly next generation missile vessel project. Hence, I expect the stock to open in green today. Next up is Torrent Power. The company gets LOA for setting up of 150 megawatt grid-connected wind solar hybrid projects worth almost 1,825 crores. Hence, I expect even this stock to open in green today.
Thanks a lot, Upasana, for that. Abhishek is with us. He's going to talk about ICICI Lombard and PNB Housing Finance. Abhishek, over to you.
Well, Sonia, to begin with PNB Housing Finance, there is a double credit rating upgrade. That is from two companies that they have got credit rating upgrade. So CARE has upgraded the rating to AA plus from AA that they had earlier. The outlook is stable from positive. The rating upgrade is on various instruments like short and long-term bank loans, NCDs, Tier 2 bonds, FDs, that is fixed deposits, and commercial papers, etc. ICRA has also upgraded the credit rating to ICRA AA plus from ICRA AA that they had earlier. The outlook is revised to stable from positive. ICICI Lombard, they had held an analyst meet, over there. The key takeaways are that significant transformation is seen in tech architecture over the past 2 years, which has resulted in better customer engagement as well as cost savings for them. So in Q3 FY24, the gross written premium from IL Take Care has risen 3.2 times YOY, that is year on year, while in 9-month FY24, the gross written premium from digital partnership is up 4x on a YOY basis. So it continues to focus on customer engagement, fraud detection, and the driving efficiency on the overall performance of the company. Back to you.
All right, Abhishek, thanks a lot for that, and welcome back as well. Well, let's go back to Ekta. She's tracking Oro Pharma. Ekta?
Well, I could expect the stock to be in the green today because they've commercialized 4 facilities. The companies commissioned facilities for penicillin G, one particular facility for 6-APA, one for injectable products, and another for granulation. The company has indicated that it will be used for captive use as well as exports. The vials facility, which is the sterile facility, will be used for exports specifically. Investec has said that these commercialization of these 4 facilities together speaks about the execution facilities or the execution capabilities of the company, and the new sterile facility could help de-risk Eugia 3, which is the one which had received a Form 483 with multiple observations and which is under the investor scanner that it could probably escalate in terms of a US FDA issue. So maybe the stock could be in the green on account of this.
All right. Thanks very much, Ekta, for that. Metro Brands is the next one we are focused on. Mangalam has got details. Mangalam, morning.
Good morning. So they've gone ahead and renewed their existing agreement with Crocs, and as a result of this renewal, they get the rights to operate Crocs stores, kiosks, and outlets, retail outlets across western and southern states of India. And additionally, they will also continue to operate all existing stores operational in northern and eastern states of India. So basically, this renewal entails a higher geographical reach. Crocs has been doing well for Metro Brands for the longest time. They've been partners for over 15 years now. And over the last 12 months or so, if you look at the way Metro Brands' stock price has performed, would tell you that it's outperformed its peers, Bata and Relaxo, by a wide margin. And over the last 10 days or so, we've got at least 3 brokerage notes coming in on Metro Brands saying that this is the most well-placed stock to play the footwear theme, the shift from unorganized to organized, and the multiple brand preferences that people have. So expect some more green on the stock, which has already been doing well.
Okay, more people wearing Crocs then. Now moving on, Vamakshi is with us to talk about some more stocks that are in the news. Vamakshi, good morning.
Well, good morning, Sonia. Let me first start off with Landmark Cars. Expect the stock to open higher today, and that is because the company is expanding its offerings with the Kia dealership in Hyderabad. The dealership sign-up will include sales and after-sales services of Kia cars in the Hyderabad region. So on the back of that, expect Landmark Cars to open in the green. We will also be focusing on Indian Metals. The stock is expected to open higher. The company has declared a special dividend of 15 rupees per equity share for FY24. And this has come in after the company has received 131.5 crores as a part compensation towards land for Utkal C coal block on March 19th. Additionally, the board has withdrawn the scheme of amalgamation with Utkal Coal, and in fact the company is making it a wholly owned subsidiary by acquiring the balance 20.8% stake from the promoters. And additionally, they've also approved investment of almost 200 crores for diversification into the ethanol business. So a couple of developments out there for Indian Metals. Expect the stock to open higher today.
Okay, thanks a lot for that. We have lots of stock-specific action to track today. So we're looking at Infosys, Lupin, HAL, Torrent Power, ICICI Lombard, PNB Housing, Aurobindo Pharma, Metro Brands and Landmark Cars. That's on our radar on the back of positive news flow. There are no stocks that are likely to open in the red on the back of negative news flow. But of course, the market will take its own course. Let's take a short break. On the other side of the break, Prakash Diwan will join in for some fundamental stock analysis. Stay tuned.
Welcome back. Hope you're having a good morning. Well, we're going to be kickstarting the year as well as the week. That's the fiscal year. And plenty of news flow in the last 3 days or so. Prakash Devan joins us to help us out with a quick analysis on all of those stocks we just discussed with you. Hi, Prakash. Good morning and good to see you in. Prakash, let's talk about the tech stocks. And Infosys is in focus because of the tax refund. So it looks pretty good, I mean, in terms of the news flow. But your view on tech, Infosys, and what do you like from there?
Good morning, Nigel. Thank you for having me on the show. Yes, I think Infosys, of course, has this big news flow and very positive rub-off sentimentally and fundamentally. But what's going to be interesting for the entire IT pack after we saw a little bit of that softness come in after the Accenture numbers came through is the fact that most IT companies are very clearly staring at an opportunity related to AI where they will have something or the other in the AI value chain, if not necessarily, everything that's related to hard coding. There could be so much of work all of them could start pitching for that after these March numbers, the commentary is going to be very interesting in terms of new hires, new contract wins. And from that perspective, I think the largest companies, offer such a huge opportunity. I wouldn't be surprised if even the likes of Wipro start participating in this new gold rush of sorts from the AI side. Of course, it's been around for a while, but it's opened up much more broadly for players to look at. Infosys stands out as, again, the best bet, notwithstanding this particular news flow today, because TCS has run up a bit too much. The valuations are kind of getting ripe out there. Infosys has that headroom. So if you had to look at the top 3-4 players, Infosys stands out. But my focus continues to be on the mid-cap names. OFSS, even after this sharp run-up, Nigel, looks extremely promising. I don't see any reason why the likes of OFSS, you go smaller into this value chain, you have a Sonata. There are these opportunities which are very clearly promising enough. But as I said, just wait for the March end numbers, and you'll start seeing the commentary from the big guys set the tone for the entire sector.
Prakash, hi, good morning. There's also the auto sales that come out today, right, for the month of March. And the expectation is that two-wheeler sales will be very strong. So the whole industry is expected to grow about 25-27% year on year. Any stocks that you're bullish on?
Good morning, Sonia. So I think Hero is the one that should be the hero of the pack now going forward, given the fact that Bajaj Auto has had its fair share of upside from those 4,000 levels to almost 2.5 times. You've also got Eicher, which has been very rock steady in the last 1 year or so in terms of price, in terms of performance. TVS, of course, has always been the darling of the market in terms of valuation. It's a Hero Moto stock that hasn't actually participated. And these numbers that you are alluding to, Sonia, they primarily will come in from some sort of a restocking and the wholesale numbers getting better. Now, if that were the case, Hero definitely stands a better chance given their product portfolio and the broad basing of their product mix. So I think Hero has that space. But two-wheelers, again, need much more than just a couple of good months. You'll probably have to see whether the demand continues to be even in the pre-monsoon periods of April and May. And if that were the case, then there's a re-rating that's kind of overdue, which has happened in PVs but not happened in two-wheelers. So, so I would wait for that. But at the moment, I'm still focused onto the largest passenger car OEMs, primarily Tata Motors. And now, of course, you've seen Maruti climb up thanks to the hybrid recognition of the high potential of hybrid technology. But I would believe two-wheelers might take some time, even after these good numbers come.
Prakash, hi, morning. What about PNB Housing? Abhishek was telling us that it's got some credit rating upgrades. For a housing finance company dependent on external financing, this is certainly good news. Your thoughts?
Good morning, Prashant. So I think I mentioned about PNB Housing as one of the best setups within the housing finance companies, especially after HDFC kind of vacated that space in terms of allocations to a pure play housing finance business. It's very similar to telecom. You have Jio, which is the largest player, but if I had to allocate money as an institution towards telecom and go for the largest, I would have to buy Bharti. I think within HFCs, after HDFC's exit, this merger with the bank, there is a lot of vacuum. Some of the players are trying to kind of get into this whole space with that mindset, with that presence. LIC Housing hasn't had its fair share of glory. But I think PNB, given the management change, the way it's kind of established itself when Mr. Kosugi came in from Calvin Homes, the way he's kind of transformed the business, they've started kind of separating themselves from the earlier trends and practices, and that is distinctly seen in numbers. It's taken some time on consolidation, but my guess is there's still a lot to go for PNB Housing Finance. The private equity ownership kind of gets it much more freedom. This is a space which, just imagine this was the year when interest rates were hard, and that's why there's the lid on the growth. If interest rate were to start softening in the second half of calendar 24, there could be absolute this thing on the stock. So there is a this thing what you call comfort. The valuations are not very rich, so you have that comfort as well. So I would be very positive given all the changes that are happening.
Okay, all right. Prakash, request you just to stay with us. Hormuz joins us. He's read a lot of brokerage notes. He's going to fill us in with a few of them. Hi, Hormuz. Good morning.
Morning, Nigel. I'll start off with a sector that you track. It's City on Ambuja Cements. There is no news coming in on Thursday where promoters have increased their stake through the conversion of warrants. And City is saying that the warrant conversion is inspiring confidence as the promoter ownership goes up. And as a result, they have maintained their buy rating on the stock with a price target of 675. They're also saying that Ambuja's balance sheet is very resilient. And they are also expecting 6,500 to 7,000 crores of consolidated free cash flow pre-capex for Ambuja Cement. So a bullish note there from Citi. But on the other hand, Jefferies has an underperform rating on GAIL and a price target of 150, which is implying a potential downside of around 17%. And they're saying that the new tariff order is making no reference to GAIL's higher gas cost. And as the risk reward that GAIL share price is currently trading, the risk reward is unfavorable with the stock trading above the 1 standard deviation over its long-term average. And lastly, Morgan Stanley on MCX, where they are also underweight, and their price target of 2,085 is implying a potential downside of nearly 40% on MCX, as they say that the average daily traded value is a key driver of MCX's profit as well as its share price. And for the month of March, the ADTV rose around 10% month on month for MCX. But the valuations, according to Morgan Stanley, at 46 times FY25 estimated EPS is stretched despite the underperformance that MCX's shares have had. So 40% downside is what Morgan Stanley projects on MCX. Back to you.
Okay. All right, Hormuz, thanks a lot for that. Well, Prakash, wanted your view on Ambuja Cements. The promoter entity gone ahead and they've converted some part of those warrants. And it's pretty good. I mean, the stock price anyway is much higher than what the warrant conversion price was. But your view on Ambuja Cements and the other cement stocks, so the problem for the past quarter was that pricing was weak. And that's what, hurt sentiment. The volumes are quite strong. Your view?
No, I agree. So if volumes pick up, that's far better than, just having to depend on price increase with very low volumes. It doesn't last too long. Volume increase is something, Nigel, which is never a one-off. And I think there's going to be an accelerated consumption trend that will emerge this time pre-monsoon. Remember, we are into the 4th year post-COVID. The entire cycle is kind of normalized. This is a full year of normal business. And there are so many housing starts. Housing takes up almost 42-43% of cement demand in the country. And if no new greenfield projects are getting added, somewhere, the pricing will have to catch up. Of course, in India, there is this fear of glut kind of a situation down the line once a lot of these new additional capacities, brownfield expansion for larger players goes through. But I would differ. The only fear is if cement prices were to be, if they were to crash, if dumping happens from somewhere else, using the sea route and all, which is a hypothesis which is fairly far-fetched at this point in time. On Ambuja specifically, I think the efficiencies that they have started incorporating, and I have spoken to a few dealers in terms of how things are looking, and the kind of, by the way, they've changed the entire platform on which the inventory management was carried out. So that's something which typically happens after you've done enough changes on the production side, because it's more front-ended. So if they've done that, you will start seeing in FY24-25 a lot of benefits on the cost efficiency, which the management spoke about when they acquired the business. So wait for that. I think, of course, it's run up quite a bit from those 400 odd numbers. It's 50% higher from the time they acquired it. But I would believe it still has salience. Buy on dips is probably a better strategy on the cement side, especially with the likes of Ambuja and Ultratech.
All right. The other stock I wanted to chat with you about was Hindustan Aeronautics. I mean, the stock is up 70% in the last 6 months and orders are just flowing in thick and fast. They've received another almost 1,200 crore order from Cochin Shipyard. Is there still more to go on the upside here, Prakash?
So, you need to look at the fact that there's such a brilliant, strong moat around the business. Nobody else can come and challenge these people. I mean, you have leadership in a space where the government is so supportive. You have international orders thanks to, the strong international diplomacy that the government of India has been engaged with. You will start seeing more of these smaller countries having to rely on India for technology on the aerospace aviation side. And my sense is that with the ecosystem maturing, the turnarounds, the order booking to realization cycle is actually coming down very dramatically. I'm sure somebody will catch on to that trend and start reporting about it, or some sort of anticipation built up around this. My expectation is that HL will always be now valued, with very rich premium multiple valuations. But whether you should buy at this level, it's a big question, because you have slightly smaller companies in the defense pack which are available at probably less than, 20-30% lower than their 52-week highs. HL doesn't feature there. It's right close to that same level. But I would definitely buy some of these defense stocks, not HL necessarily, given its rich valuation. And it will, as I said, it's contradictory. I'm saying you don't buy because of rich valuation and the rich valuations continue. So when you buy, you'll probably have to wait for a meltdown if it happens in some of these sectors. But other than that, I think there's nothing stopping it from growing organically, at least at a rate which is higher than the industry.
Prakash, just coming back with more questions, I want to talk about some of the big movers of the holiday shortened week that we had, the last one that is. But let's talk about the commodity space and the action from there, because I think there is movement there. I mean, iron ore prices, for example, are seeing some large moves. And Manisha is here with what's top of mind. Manisha, morning.
Morning, and thank you for that, Prashant. Well, iron ore and steel clearly have continued to decline because the street is still waiting for more even data coming in from China. But I want to talk about the gainers here, because you have an all-time high on your screen for the gold prices. Yet again, it's $22.50 an ounce. We've seen 10% of gains in gold in the first quarter of this year itself. And not just gold, silver is trading at around one-year highs. We've seen 11% of gains onto this one. The crude oil prices have continued to gain up. It's seen a 16% of a jump up in the first quarter. We saw 3% of gain in the previous week itself. Well, attacks on Russian refineries, upbeat Chinese manufacturing data really seems to be doing the trick. So everywhere that you see in commodities, the first quarter has been great, and we've seen the second quarter start on quite a positive note.
All right, gold prices, that's the big headline, right? $22.50 an ounce. So what is that in terms of MCX gold prices, Manisha?
So we've crossed around 67,700 onto this one. But let me tell you that in the spot markets, when you go and buy physical gold, you'll give making charges and you'll give GST. So in spot markets, in physical market, if you're stepping out to buy gold, you're paying north side of 70,000 rupees per 10 grams right now.
Oh, wow. And that's why perhaps sovereign gold bonds is the right way to go if you're looking to invest in gold. Thanks a lot, Manisha, for that. Well, big moves coming into the gold market, and that's the other big headline that we're tracking. But before we get into a break, let me tell you what's lined up for the next half hour on the show. Anuj Singhal will be joining in for a quick trade setup. Post that, we'll bring you the top stock picks for the day from our technical and F&O experts, so do stay tuned in.
You cannot change.
Okay, welcome back. Well, let's just quickly go back to Prakash, who's with us. Prakash, just a couple of names your way. These are big movers over the last week, right? You had Aegis Logistics, which went up 15%. Big move. And I think I saw some notes as well there. BSC was up about 15%. This is over the last 1 week. Angel has come up nicely, some 15% on this one. Two are capital market plays, and of course, the other one is a logistics company. Any thoughts? Do you track any of these?
Sure, Prashant. I'll stick to the hard business of infrastructure and logistics. The capital market, of course, is likely to continue doing its own thing, and hence there is a little bit of excitement around it. But valuations do not permit me to buy into any of these at this point. Aegis is the one that you need to really watch out for. Hasn't really, become so rich or out of reach of sorts. from a longer term perspective. If you look at the earnings next year and the year after, FY26, given their capacity enhancements, given the way there's going to be a likely, and you spoke about this so-called glut in the LNG supply from Qatar and the US, there's going to be absolute no reason why we will not be big consumers of gas. And if you actually see the mismatch between the consumption, transportation side and the storage side, all people who are part of that infrastructure, part of that value chain on storage will benefit. So, I don't see any reason why agents will have to look for better business. They'll get pricing power. They'll get very good asset utilization rates. And all of that is what was ailing the stock in earlier days when, it kind of consolidated between the 200 to 380, 370 zone. So my sense is that is over. It's kind of come out of that consolidation brilliantly with the prospect, with the potential of continuing that improvement for the next couple of years, not just, 12 months, 18 months. I'm talking about 24, 36 months. So very, very positive on Aegis. And of course, we'll keep discussing this as the news flow around it in terms of its operation enhancements that they're talking about starts coming.
All right, Sriyan Prakash, we'll come back to you in a bit. Anuj is joining in now for a quick trade setup. Anuj, we're back after a long weekend and, lots of fun and games now over. Back to work. But what are you tracking this week?
Yeah, morning, Sonia. Good to have all three of you back as well in full strength. Well, it's, new day, new week, new series, month, quarter and year. That's what it is, 1st of April. Anecdotally, April has been a good series for the markets. I have just some numbers for you. Of course, you want to take it with pinch of salt for the April 20 series because that was immediately after that COVID lockdown and after the month of March. But even then, if you see the other years, more or less the series has been quite positive. And, at the start of a new financial year, new allocations are made. So generally, it's been a good month. Now, the rollover picture is very interesting. You've seen 70% rollover for Nifty versus an average of 80%. But the Bank Nifty has seen 84% versus average of 74%. So this could be the month of Bank Nifty for all you know. But on the Nifty, we missed hitting the all-time high by 10 points on Thursday. It was that kind of a late surge and then an equally sharp fall in the last half an hour. The base case is that the Nifty has made some kind of bottom at 21,900 to 22,000 and it could be a good month for the broader market. We've started to see signs of that over the last 1 week. Coming to levels now then on the Nifty, the first resistance is 22,425 based on the charts and the bigger resistance is at 22,526, the all-time high. The support, of course, which is more important, comes in at 22,164, Thursday's low, and then the bigger support, 21,950 to 22,000, based on options and the recent low as well. The Bank Nifty, which has shown signs of outperformance, the first resistance here is 47,440, Thursday's high, and then 47,700 based on the options data. And the support, both supports are very close by, 46,828 and 46,750 based on Thursday's low and also based on options. As always, I leave you with the one quote for the day, and this one comes from perhaps the greatest humorist of all time, Mark Twain. Today's April Fool's Day. The 1st of April is the day we remember what we are the other 364 days of the year. So enjoy April 1st.
All right. That's a nice one. Anuj, thanks very much for that.
So we're all fools, basically.
Oh, yeah. I mean, I think, okay, you should live with that presumption.
Yeah.
I think the rest is easy, right?
Absolutely. Life will be easy if you have
absolutely.
that policy.
Well, we'll take a quick commercial break here. Anuj, thanks very much for that. And I think what we'll do is we'll go across to Mitesh and Sudarshan, who are with us with what they're making of the trade setup as we begin this fresh week. Gentlemen, good morning. Good to have both of you here. Mitesh, the question is the downtrend over? Starting mid-January, the fall that we had on Thursday, the last session, we got to within 10 points of the previous high. And then, of course, there was a bit of a sell-off. But what's your sense and what's the thing to do in terms of trading indices today?
Morning, Prashant. See, there was no downtrend as such. It was more of a corrective kind of a move, which saw us test levels closer to about 21,700. I think that correction is over. We should, unless something negative happens, I think we should over the next few days try and get past the earlier highs of 22,530. And once that happens, 22,800, 23,000 kind of open up as the target area. So I would be trading with a positive bias. The Bank Nifty started participating. Index heavyweights like HDFC Bank, etc. also have shown some good traction on the near-term, short-term charts. So in that sense, I think, my belief is that with a couple of days of volatility, I think the market should be targeting to make a new high, and therefore buying would be the best idea.
All right, Sudarshan Sukhani is also joining in. Sudarshan, it's been a dream run for this market, back at 22,300 now. So every dip has gotten bought. It's worked in the last, many weeks and months. But what about this week? What's the best strategy that you're looking at?
Yeah, good morning. See, on last Wednesday and Thursday, I had said, let's go and buy the Nifty. There is an uptrend in the offing. That view continues to remain valid. We've seen a sharp intraday correction. These things happen. We look at it the other way around. The market could easily have corrected for 3, 4, 5 days. Instead of that, all it did was correct for 1.5 hours. So I would treat that as a bullish sign rather than anything else. We'll see some sideways moves, some choppy movements. We had a wide range bar on Thursday. The markets will have to pause and rest, but the trend remains up and every small dip should be bought into. That's for the Nifty. I'm not so upbeat on the Bank Nifty. The Bank Nifty has not participated in this rally. It's much lower than its previous highs, unlike the Nifty. So maybe the focus should remain on the Nifty itself.
Optimistic on the Nifty's move, not so positive on the Nifty Bank. Got that, Sudarshan. Sudarshan, you carry on that and tell us what are the top ideas you have for the day.
Well, Godrej Properties is a buying opportunity, and that's a stock that's probably completed its correction. Buy with a stop loss under 21.32. Cipla is a buy. It was in a range. It never had a deep correction. That's upbeat. Buy Cipla with a stop under 1418. Balrampur Chini is my only intraday short. Sell with a stop above 373. And finally, my final suggestion is also a buy. Bajaj Finserv, that we had a big wide range bar on Friday. Well, that happens, but that tells us it's willing to go much higher. Look to buy it on a small dip. Don't just rush into it in the morning, but buy it on a dip with a stop under 1557.
Okay. All right. Thanks for that, Sudarshan. Mitesh, what about you?
So, good morning, Nigel. I have Bajaj Finserv on my list as well. Keep a stop below 1620 here. Look for targets closer to about 1700. That apart, Info Edge made a new high. So that's a buy with a stop at 5500. Look for targets of 5800 here. A buy on Havells with a stop at 1498 for targets of 1550. And a buy on Nestle with a stop below 2600 for targets of 2690.
Well, thanks a lot for that. These are a couple of stock ideas. But moving on, some important global developments today and a surprise blow to Turkish President Erdogan. The country's main opposition party, the Republican People's Party, swept Turkey's local elections, maintaining control of major cities including the capital Ankara and the city of Istanbul. President Erdogan also conceded defeat in a speech outside the party headquarters, said that regardless of the results, the winner of the election was primarily democracy. Ahead of the election, Erdogan was also at the forefront of his party's campaign to retake Istanbul, holding rallies in the city in the week before the vote and attending prayers at the symbolic Hagia Sophia Mosque prior to the ballot. Okay, that's a big global development that has taken place, and more on that later. Let's take a quick commercial break. On the other side, we'll have the pre-opening rates. We'll also have Parvez Akhtar Qazi of Nuvama Group to put focus on the real estate sector and the big trends there. Stay tuned.
Brought to you.
Welcome back. This is Open Exchange and you're tuned in here on CNBC-TV18. Well, Prakash Diwan's still with us. Prakash, I wanted your view on some of these PSU metal stocks. The year FY24 belonged to them. Nalco, you had Hindustan Copper. They did very, very well. Hindustan Copper actually fell off the cliff towards the end of trading session on Thursday, but that could be an expiry-related factor. Nalco as well is quite interestingly poised because they're going to be getting the benefits from lower coal cost in FY25. And pricing is fairly good. In fact, it's improved quite well from the recent close. Your view on both these two names?
So, I think, Nigel, very clearly, these are names that sit on very significant moats and, almost monopolistic advantages. One of the reasons why Hindustan Copper reacted a bit negatively last week was probably in anticipation of enhanced competition from the Adani refinery, which started. People forget the fact that Hindustan Copper is not just into refining of 5 lakh million tons, but it's actually a lot of mining of the ore itself, which nobody else is participating in. Given the kind of demand for power globally, look at where copper is. The Nifty is moving up. Mr. Copper will continue to do well in the commodity basket. I don't see any reason why Hindustan Copper won't participate in the rally again. The other name, apart from these two, which I would like you to focus on is Moil. There is a slight price increase that's been done after a fairly long gap. It also tells you that the kind of demand situation is yielding some sort of pricing power back to the name. It's kind of come off from its highs. I would believe it will start participating in this rally as well. NMDC, NALCO will have much more complexities in terms of their movements going forward. It's not going to be very secular, uninterrupted of sorts. But Moil and Hindustan Copper, I think, they absolutely stand out in terms of the advantages, the specific ores that they mine, and that the valuation and the price setup is very, very favorable for both of these names. So I would definitely allocate some money if I don't have mining stocks in my portfolio to these.
The biggest gainer this year, Prakash, so far has been Bajaj Auto, right? 35% gains is what we're seeing. You were making a small mention on the two-wheeler stocks a while back, but particularly on Bajaj Auto, I wanted your thoughts, because this month the expectation is that there would be almost an 18% growth in their volumes, and that would be led by a 25% growth in the domestic volumes, and that's no mean feat, right? I mean, consistently seeing a 20-25% growth. Do you think they can build on to these gains even in terms of the stock price?
So, Sonia, you're right. It's had a stellar turnaround of sorts, from a situation where in 22, we were talking about struggling exports and all of those in Nigeria, Latin America, and look where the stock is today, or the business is today. The domestic segment, it's thanks to their segmentation that's helping them. They actually are not into premium bikes or high-end bikes as much as Eicher and TVS are. They're not into absolute entry-level bikes anymore as Hero is. So they've kind of got the sweet spot, and that's the segment that has actually continued growing even in a tepid demand scenario, right? So I would believe if that segment is to continue growing, there will definitely be some salience that's attached to it. But from a price perspective, I think it's pricing in a lot of that goodness. As I said, I would look at Hero MotoCorp. If Bajaj has done that with a lag, Hero will also participate, and that gives you that comfort that Hero is not yet kind of moved into that. Hero had its own share of problems, of course. We all know about it. The key trigger in Bajaj, if you really ask me, is going to be how the CNG bikes are going to get accepted. It's an experiment. It's fairly potentially disruptive, but whether the market accepts that in terms of utility and application, that is what we would want to see. So I would wait for something like that before kind of building in some price gains from the Bajaj script after the stellar run that's already made. Of course, you had the buyback and all of those things adding to it, but I would believe it will consolidate a bit and wait for the next trigger, which potentially could be that CNG bike launch.
Prakash, the other space which saw, drawdown, a correction was hospitals, right? Now, is that opportunity? We sort of discussed that when that was happening, but Max has moved up from 700 to 800. Narayana has moved up from 1200 to 1300. They're still off the highs from where they fell when the news came that there'll be regulation and price controls, etc., on standardized procedural rates. That was the crux of it. What do you like in that space?
So one of the names that you mentioned is absolutely the most resilient out there. NH Narayan Rudale has, if you look at their price list and compare it with an Apollo or even Max for that extent, it's definitely something which will not get impacted if price restrictions are imposed, given the fact that they've always segmented or positioned themselves to cater to the mass affordable market in terms of procedures that they carry out. For hospitals, Prashant, you need to remember it's only organic expansion or maybe some couple of inorganic acquisitions for which some of them have been making, which actually leads to better efficiencies. If they don't do that, because given the existing facilities, there's a limitation to what you can do in terms of average revenue per bed. It's only from that. If you see, Max is the one that's been very rapidly expanding. In fact, today there's some news flow around them setting up a hospital in Lucknow. They've got some possession of a land parcel to set up a hospital. So that's where they're using the cash. Narayan Rudale hasn't announced any expansion, but if they were to, I think it will go to the next leg of growth from where it is. But it's definitely something which is the best out of the pack at this point. And the valuations have also become much more comfortable.
Right. Chandan Taparia is joining in. He's a derivative and technical analyst at Motilal Oswal Financial Services. Chandan, hi, good morning and thanks for joining in. The market has done very well despite all the volatility that we've seen. We're once again back above the 22,000 mark. How are you feeling about that, and do you think we can build on to our gains this week?
Good morning, Sonia Prasad. Thanks for having me. So we have seen some sort of consolidative move, but market was forming the higher base. In Nifty, we have seen slightly lower rollover, near to 70-72%, but in Bank Nifty, rollers were comparatively better. The index started to form the higher base. Earlier support were at 21,500, that shifted to 21,700. And now I believe the option data indicates the higher base at 22,000 to 22,121. So we will continue to be with buy on decline stance. We'll utilize any small dip as a buying opportunity with support of 22,121 and expecting this rally to hit towards lifetime high of 22,526, and market has potential to head towards 23,000 in this series as well. So expecting further 800 to 1,000 points move in this series. But yes, volatility is lower, base is shifting higher, put call ratio is holding well above 1.2. That clearly indicates that every small decline could be bought. Now talking about Bank Nifty index, Bank Nifty has seen comparatively better rollovers, open interest headed. So longs are carrying from previous series to current series. However, it has been slightly underperforming, but yes, holding well above its 50-day mark. So with support of 46,750, we are expecting a move towards 47,777 in the banking index. Now looking at the individual stock idea, first it is buy on Indian Hotel. Major trend of the counter is positive, and after the consolidation of last 4 weeks, it is again all set for the next leg of rally. It is respecting well above its key moving averages. Longs are building. In fact, rollovers are better, which indicates next leg of rally in the counter. So recommending to buy with support of 580, and Indian Hotel can head towards 620 zone. Second trading idea, that is buy on Tata Communication. Tatacom looks good, forming higher base with hold of key support zone. Longs are intact. We have seen the short covering trigger as well. So recommending to buy with support of 1970, and this stock can head towards 2120 zone. Last trading idea, that is buy on Titan. We have seen a V-shaped recovery in the counter in the last 6-7 days. Major trend is positive. We have seen put writing activity. Even call unwinding is seen. Rollovers data and roll costs are indicating positive clue for the current series. So one can buy with support of 3750, and Titan has potential to hit to us 4,000 marks.
All right, Chandan, thanks so much for joining in. Wishing you a good trading session ahead. And in fact, hopefully it'll be a good fiscal as well for market participants. Let's go back to Prakash Devan. Prakash, I wanted your view on some of these pharma names. You have some positive news flow on Oro Pharma today. Lupin as well will be in focus. How are you approaching this space? Because it's actually been the best start, for the pharma pack. They have actually been relative outperformers in comparison to some of the frontline stocks. Your take?
So I think, Nigel, as the news flow starts intensifying around approvals, which is the case in Lupin, for instance, every few days you've been seeing newer approvals coming from the US FDA. These are not blockbuster drugs necessarily, but there's lots that's happening in terms of their portfolio starting to wake up of sorts to come to life, which was the reason why it actually lost so much ground 3 years back when things in the US were very difficult. So, but Lupin's already done its bit in terms of the first leg of the move. You'll probably have to start going to the other names where you have, there was a very interesting analyst day conducted by Suven Pharma, for instance, which is a company that Advent has, and they've kind of started process of merging it with Cohance, which is the other portfolio company. You look at these small companies that are kind of becoming bigger at a very rapid pace. My sense is you'll have to look at pharma absolutely with a very positive lens. Because the value chain is very large, you would have API players, generic specialties. There's so much happening there. You will get options. In fact, the allocation from the institutions towards pharma is still not as high as what historically it's been, given the fact that the market cap representation is also slightly lower, though the names are there are many names in the sector. I would believe you can still look at specific names. I'll leave you with is one is, of course, Suven Pharma, and as a matter of disclosure, I do have some personal interest in this. The second is look at smaller names like Natco. These are the names, the companies that have done a lot in the last couple of years to build their pipeline. as they start commercially, monetizing some of these, you'll probably see these bump ups in terms of earnings potential. Of course, even in the last 9 months, it's already done more than what it did, much more than what it did for the whole year. So if this quarter goes off well, the numbers come out, the market will start recognizing that this is not one-off. So there is enough meat on the bone in terms of the pharma names, and I would believe that's an allocation that you definitely have to look at seriously. Whether you look at big ones, mid-sized ones, doesn't matter, but don't go absolutely down the value chain in very small companies because there could be lots of triggers that could create volatility there. But the bigger ones, the mid-sized ones are extremely promising.
All right, well, let's talk about the momentumizer stock of the day. Sonal is joining in now to give us, that stock that she's looking at. Sonal, over to you.
Good morning, Sonia. The stock on my radar today is Imagica, and the stock has done really well in this year itself and last year as well. So this year it's up around 30%. On Thursday it was up around 5%, and it crossed that 50-day moving average in Thursday's trading session as well. And the volumes have been picking up from the generic 5 to 6 lakh volumes that it trades on NSE. It has increased to levels of 32 lakhs and 22 lakhs as well. So it has been continuously gaining momentum. Now, what are the triggers going forward for the stock as well? There is increase in footfalls during summer because of summer vacations, and also the company has scaled 4 parks that they acquired in February. So these are some of the things we'll be watching out for. But yes, the stock has been an outperformer in the market.
Okay, thanks a lot for that. Let's put the spotlight though on the real estate sector. In a recent note, Nuvama said that the unsold inventory continues to improve and prices were up in most cities, surging as high as 20%. To discuss this, we have Parvez Akhtar Kazi, who is the Executive Director at the Nuvama Group. Parvez, hi, good morning and thanks a lot for joining in. If you can just tell us what the overarching theme is, which are the pockets that you're seeing growth in? Because, even in a market like, say, the MMR region, traditionally you had pockets like, say, a Lower Parel, Bandra doing well, but now a lot of micro markets are starting to open up, whether it's Sivri, Chembur, Versova, etc. I mean, these are just some nuances of what's happening in a market like Mumbai. But you tell us, what is the overarching theme of your report and where do you see the big opportunity over the next 1 year?
Hi, good morning. So housing sales continue to do well across most cities. To answer your question specifically about Mumbai, the western and the central suburbs are currently doing quite well. In fact, 80% of the overall absorption that we are seeing on the housing side in Mumbai is happening in these 2 particular regions. At a broader level, luxury real estate is doing well across the board, whether it is Mumbai, whether it is NCR and Bangalore. So yeah, I mean, Mumbai being a prime market has a lot of luxury inventory available in the market, and that seems to be doing well, especially in the south central Mumbai. Apart from that, mid-income housing in both western and central suburbs is also doing quite well. In fact, we remain quite positive on the Mumbai real estate market on the back of the large infrastructure spending which is happening, and that should create positive momentum for housing going ahead, even in the extended suburbs of Mumbai.
Hey, all right. Hi, Parvez. Good morning and good to see you in. Nigel on this side. What are you working with in terms of pre-sales numbers for Q4? A couple of brokerage notes are talking about 20-25% growth. What are you factoring in? Because we'll start getting those numbers in the next few days.
Yeah, I mean, we should see somewhere between 15 to 20% kind of YOY growth in Q4. Now, one has to keep one thing in mind. Unsold inventory with most listed developers now is quite low. And therefore, pre-sales number in any particular quarter are now heavily dependent on launches. Now, for most developers, frankly, it is difficult to have a steady stream of launches every quarter. So you will see that bit of volatility in pre-sales numbers across quarters. Quarters which will have healthy launches will see very, very high pre-sales numbers. On the other hand, you might have 1 or 2 quarters in a particular fiscal where there are not too many launches, and therefore pre-sales might be a bit muted in that quarter. But frankly, I mean, for real estate, one has to move away from looking at a quarter-to-quarter phenomena. On an annual basis, we do expect 25 to 30% kind of pre-sales growth for most listed developers in FY24 as well as in FY25.
Parvez, hi, morning. I completely take your point that inventory with the listed players is low, but you'd agree that supply is coming, has and it continues to come on very fast, right? You mentioned especially the south and central Mumbai. A lot of new supply coming up there's just cranes everywhere, and you speak with builders, you just have to look around what's happening. Will that be a catalyst for could that be a catalyst for some sort of price correction, over the next, say, 6-12 months?
Hi, good morning. Frankly, we are not really in a range where you are likely to see price correction either in Mumbai or in fact in any other market. In fact, if you look at last couple of years, except Hyderabad, all the other major cities are continuously witnessing decline in unsold inventory. The reason is very simple. While supply definitely is picking up, but the improvement in demand is in fact much higher than supply. I mean, to put a number, if you look at CY23 as a year, demand rose 30% YOY, whereas supply was up only 16% YOY, and that too on a lower base. So the unsold inventory continues to fall. In most cities, it is anywhere between 15 months to 22 odd months. So frankly, even including the South Central micro market, we are not really likely to witness unsold inventory going up anytime soon, nor there is going to be any pressure on prices. Having said that, the extent of price increase obviously is going to be different in different cities. Mumbai anyways is an expensive market. Housing affordability is kind of low here. So compared to other cities, price increase in Mumbai might not be that high. But frankly, we are not really expecting any kind of price correction in any major markets in India.
Okay, I wanted your thoughts specifically on prestige estates because, they are doing a lot to capitalize on opportunities in the residential sector. They've now entered into a deal with ADIA and Kotak AIF as well for 2,000 crores. Despite the rise that we've seen in prices already, in the stock price that is, do you expect more?
So whether we talk about prestige or in fact most other listed developers, valuations frankly are expensive. Many of these stocks are now trading at a premium to NAV, and this is something which we had last seen only in 2007. So there is a chance that in the near term, most of the real estate stocks might do only sideways. But as we said, I mean, we expect 25 to 30% kind of pre-sales growth for most listed developers. So overall, we remain bullish on most listed developers. Prestige, in fact, is one of our top picks because housing, clearly, they are doing well. They are entering many new markets like NCR, etc. Apart from that, their other major segment, which is office, also is doing quite well. And after a couple of years of slowdown post-COVID, we are witnessing good demand even in the office segment. So we do expect prestige estates to do quite well going ahead.
Okay, all right. Parvez, so you're positive on prestige. Which are the other stocks that you're positive on? If you could run us through the top 2 or 3 ideas.
So our top picks are in fact companies which have presence both in the housing as well as office segment, because as I said, both these segments are doing well. So we like stocks like DLF, Prestige and Brigade.
DLF, Prestige and Brigade.
Brigade
Okay.
Enterprise.
All right. Any other companies where anything that you're, underweight on, where you're a bit circumspect given the kind of rise that we've seen in the prices?
Fundamentally, we are positive, but yeah, I mean, obviously from a stock price perspective, keeping in mind valuations, we currently have a hold recommendation on Godrej Properties and Oberoi Realty. But apart from that, we have a buy recommendation on most other real estate stocks in our coverage universe.
Are you expanding the coverage to include more names, Parvez? Or stick with what you have? I mean, yeah, sorry, go on.
I think we have a pretty decent coverage. We cover about 13 stocks, including the REITs. But yeah, I mean, going ahead, more real estate companies are definitely going to come into picture. So yeah, I mean, in future, we would definitely look at expanding our coverage.
There was a story, I think, Dosti Realty, the Mumbai-based player, perhaps is coming up with the IPO. So yeah, I mean, there will be more listings per se, and there are a few others already out there as well. But it's great to have you with us here. Thank you very much for joining us, and it's good chatting with you here on CNBC-TV18. So that is a quick chat on the real estate space. I mean, I think we've come to the end of the pre-open session. The market open itself is about 5 minutes out. Maybe we can just look at the few names, I mean, top stocks, which perhaps should be in focus. The Nifty is up 130 points, so this is a very strong start. The sensex is indicating a 300-point higher start right now. Look at PNB Housing, if we can pull that up. The credit rating upgrades to the agencies coming up with that. PNB Housing starts about, 3.33% higher. Maybe look at Escorts, which I think just came out with sales numbers for the month gone by. That's, of course, just now. And Escorts is absolutely flat, no big change. So just a sort of few names here, which perhaps are going to be in focus. But, the 9:10 call with our technical expert, Sudarshan, is here to tell us what's on his radar. Sudarshan, hi, morning.
Yeah, consider buying Cipla with a stop under 1418.
Cipla with a stop under 1418. Mitesh, what about you?
I'll go with a buy on Info-Edge and Naukri with a target of around 5,800.
Okay, I just want to make one mention on Escorts numbers, which are really very weak, much weaker than what the street was estimating as well. And the management writes in their press release that the shift in the Chaitra Navratri festival to April this year, along with last season's erratic monsoon patterns and resultant low water reservoir levels, has affected the agricultural sentiment quite a bit, both in the central as well as the southern regions. That has resulted in delayed harvesting of Rabi crops, and hence you've had the setback in terms of numbers. But let's hop across to Abhishek. He's tracking PSU banks. Abhishek, over to you.
Well, BofA has written a note on PSU banks wherein they say that consensus estimate for FY25 is still, on the conservative side, and they see scope for 10 to 20% EPS upgrade. So valuation upside of 10 to 20% is possible given the fact that there is consistency improvement in EPS, ROA delivery, as well as foreign ownership, which has actually increased. So they prefer Union Bank, Canara Bank, as well as Bank of India, as they see better risk reward in smaller PSU banks on higher earnings growth and valuations upside. So they say that the key stock picks, why go beyond SBI and BOB, is the reasons are EPS expectation for SBI and BOB are already quite optimistic, leaving much lower room for positive surprises, while other PSU banks are still 1 to 2 years away from the earnings EPS recovery cycle, positioning them to drive positive surprises in FY25 as well as FY26. So foreign ownership in other PSU banks are still half of what we are seeing in SBI as well as BOB. So they see room for this to narrow. The earnings detailed rationale with respect to their target price as well as valuation is up on screen for reference.
Okay, all right, Abhishek, thanks a lot for that. Well, let's go to Sonal. She's here to tell us about MGL as well as IGL. Sonal?
Good morning, Nigel. Well, I'm also tracking GAIL. Let me quickly tell you about that first up, because the PNGRB, they issued an unchanged unified tariff order with the effect from April 1st. It is steady, but they will be revising the tariff from June, because there will be new pipelines that will come in play as well. The current tariff regime, Jeffrey says, is already factored in, and they maintain an underperform with a target price of 150 rupees a share. Let's talk about MGL and IGL right now. There is a Prabhudas Leeladhar note where they say that electric vehicles pose the biggest threat to CNG. CNG sales account for 75 and 73% of the total sales for both these companies. But sustainability of CNG volume growth has been a concern due to the rising adoption of EVs. They've downgraded IGL to a hold, from a hold to a reduce with a target price of 382 rupees a share. They've also downgraded MGL to a sell from a hold, reduce right now, with a target price of 1124 rupees a share. They are comparing with the China, because China's total gas consumption has grown, aided by residential and industrial demand, but not so much by CNG demand. The 4 listed CNG players there, they have seen a degrowth, and they expect IGL and MGL to see the same thing and the same fate as well, where volumes will decline because higher penetration of EVs as well. And that's the reason they are they are bearish on these two names.
All right, thanks a lot for that. Well, just 20 seconds left for the markets to open, and looks like it's going to be a strong opening today. Then Nifty is up 120 points. Remember, we had a couple of challenging weeks, some bit of volatility, but very quickly we sort of got that dip, bought into that dip, and now the Nifty is back above 22,400, and it's the start of a brand new quarter.
Absolutely, and the first rates are quite encouraging, right? Overall, I think you've got. By the way, the market breadth is quite is opening in a pretty very, very positive way. 10:1 in favor of advances, but that in more of that is just a bit. The first rates are there, 130 points on the Nifty and about 300 points on the Nifty Bank. Mid-cap index is starting about nearly 1% higher as well. And I think you've got this Nifty Small Cap Index, which is starting even better, 1.25% higher in the Nifty Small Cap Index. So low down the curve, bigger the gains, at least right now, right at the start of the trading session. But Sonia has walked across to the wall. She's got more rates. Sonia.
Well, thanks a lot for that. So let's start with Infosys, right? Because over there, the company is expecting a refund of over 6,300 odd crores. So the stock is well in the green, up almost about 1.5%. The refund will come in from the IT department. Aurobindo Pharma has commissioned facilities for injectables products as well as granulation. The stock is looking good, up almost 3.5%. One of the big movers this morning. Tata Technologies, Bank of America has upgraded the stock to a buy from a neutral, and the target price is 1,250. So Tata Tech is up almost 1.5% right now. PNB Housing Finance has got a credit rating upgrade from CARE. So that one is in the green as we speak. PNB Housing Finance just coming up for you in a bit, 6.5% higher on the back of the credit rating upgrade that they've got. Metro Brands has renewed their agreement with Crocs. So you'll see a lot more of that, especially in the Indian market. So Metro Brands up about 0.3%. And Hindustan Aeronautics has received a huge order worth almost 1,173 crores from Cochin Shipyard. Remember, Hindustan Aeronautics, the stock is up 70% in the last 6 months, so continues to see a lot of traction over there. Landmark Cars is expanding its offering with Kia dealership in Hyderabad. So Landmark Cars is up almost about 2%. Torrent Power has won an award for setting up a 150 megawatt grid-connected wind solar hybrid power project worth almost 1,800 crores. Torrent Power is your huge mover this morning, up almost about 5.5%. Some brokerages on Ambuja Cement, Citi says that the warrant conversion has inspired confidence as the promoter stake has gone up. Ambuja Cement seeing an additional gain of 1.5%. Macrotech Developers has acquired 50% stake in Siddhivinayak Realtor. So Macrotech Developers is up 1.5%. And just some data that came in a while back, which is Escorts, where the sales have been pretty weak in the month of March. And the company has talked about the erratic monsoons, which has delayed the harvest season. And hence Escorts is just about trading flat right now. And IGL, which my colleague Sonal just spoke about a while back, there's a downgrade that has come in from Prabhudas Leeladhar, so that could be in focus as well. But otherwise, it's a good market, you'd have to say. Just look at this. The Nifty is now up 170 points, almost at the 22,500 mark. So great start to the new quarter.
Well, that's right. The Nifty bulls are off in a flash, it seems, and in fact, building onto those gains. So a good start to the fiscal year as well. Thanks a lot for that, Sonia. Well, pulling up a few stocks that are doing quite well. RVNL, they declared the lowest bidder for a project worth around 150 crores, coming in from Southeastern Railway. So that stock is up close to around 4.5%. You have IMFA, that's Indian Metals Ferroalloys. Well, that stock as well is up close to around 4%. Two pieces of news that come about. One was the big dividend that they announced of close to around 15 rupees. So the streak lights that. They've also speaking about some diversification with 200 crores going into an ethanol project. We'll require to understand further details on that. But for the time being, that stock as well has opened up well in the green. Genius Power is up close to around 3.5%. So good uptake is what we're seeing on that one. IRDA is up close to around 3.5% as well. So good start to the year on that one. That stock as well is moving higher. And Geo Financial Services, good move is what we're seeing. Remember, that's been one of the big outperforming stocks for this year so far. And it continues doing well. That one as well, starting off with good gains. So great start, Prashant. 22,500 on the Nifty. The Nifty Bank is well up close to around 500 points and in cracking form, so to say.
No, absolutely. I think we've, Thursday, which was the last session, we got to within 10 points of the high. And then, of course, there was a sell-off. We are knocking at 22,500 once again. So just about 25, 26 points more, and then we're there. Just a few other names, right? I mean, Adani Total is the top volume-led gainer across the board. It's up 5%, 975 on Adani Total. And I think Muthoot Finance is another one. Muthoot Finance has got large volumes for this point in the day. And that's back almost at 1550 now. So, so almost, I think, it's been a while since it's been at these levels, Muthoot Finance. PNB Housing, of course, we mentioned. Action Construction Equipment, that's another one. 5% again on Action Construction Equipment. So, decent gains. Garden Reach is, along with HAL, 4% on Garden Reach, 4% gain, 794 on the stock. And maybe look at a few other names, Global Spirits, and go down the list, but volumes are lacking. Volumes are yet to pick up at that part of the market. Zaggle is down 1%. So these are just sort of on the other side. Small cuts, but volumes on Zaggle are high, 285 on Zaggle. Aegis Logistics, we were talking about that in the morning, 15% over the last 1 week. Stocks down about 1.6, 1.7. ICICI Securities is down about 0.75%. at about 722. Ashoka Buildcon is another one which is down about 2%, and Policy Bazaar, PB Fintech, that's down marginally, but nothing very large at all. So that's the markets for you. Rahul Arora is with us. He's CEO at Nirmal Bang Equities. He's with us here in our studios. Rahul, great to have you with us here. Thanks very much for your time. Starting into the second quarter, this calendar, will things, what's your sense? I mean, positive, negative, which way are you leaning as we begin this new financial year actually?
Morning, Prashant. Thank you for having me on the show. So I think it's the start of a very interesting quarter. You've got the IPL underway, you've got a 2020 Cricket World Cup, and you've got the largest democracy in the world going to elections. So I think
festive kind of
I think
mood,
for your sector, it's a feast for the entire media sector. But that being said, I think we're knocking on the doors of all-time highs.
Yeah.
We saw a bit of a scare in terms of a correction. I don't want to opine on whether all the froth was taken out of the system, but I think the kind of liquidity which we've spoken about in the past, that is there in the system of maybe about 1.5 lakh crores if you add all institutions, it doesn't allow for major stock corrections because, you're getting about a 15-20% correction on a stock that you're already holding. Funds are coming in and buying. Demat accounts are continuing to do well. Look at the way Angel One's doing as a stock. SIPs are continuing to do $1.5 billion plus. So all things considered, you may get a bit of a pause, I think, at some stage. But, the way I look at it is if this government was to get re-elected, I think the main focus now, because most of their agenda on regulation, on foreign policy, even things that have been bordering on the line of religion have all pretty much been taken care of. So I think if this government was to be re-elected again, it will be squarely focused on the economy. And I wouldn't be surprised if the index compounds at about 15-16% over the next 5 years, which basically talks about a doubling of the Nifty over the next 5 years. That's not to say that you won't have a down year. But I think all things point to the fact that
it's possible.
It is extremely doable. And also, Prashant, I think the other asset classes are not giving you much returns. I know gold is at a new high today, but I think after the finance minister tweaked the norms for debt last budget, and I think that's played a very important role. I think people don't understand how important a role that changing of taxation of debt has had to play in equities, because now post-tax on fixed deposits as well, your returns are 4.5-5%. So today, if I invest in a US Treasury, I'm getting 5.25%, risk-free. And in GSEC in India about 7%. So I think there's no reason to be circumspect. We've survived 2 wars. We've survived crude. Rupee is stable. Your CAD is stable. The external sector is all right. Let's be bullish as we enter the new financial year and hope that by 2029, if we're all still here and sitting and healthy, we're probably looking at an index that's double of where it is today.
Of course, we'll be still here. I mean, 2029 is not too far away. It's not too far away, right? I mean, 5 years from now. But a great start to the financial year, by the way. The sensex is now up over 500 points. The Nifty is up almost 180 points this morning. And the bank Nifty is up 1%. And it's not just equities. Gold is also doing very well, as Rahul was pointing out. And one space that's looking very good this morning is the entire travel and tourism space. So stocks like Indian Hotels have hit fresh highs this morning. Indian Hotels is now at 600 rupees, which is a gain of almost 37% this year. And then you have Interglobe Aviation, which is also at a fresh high this morning. So
EIH is up 7%. Sonia.
EIH is up 7% after the long weekend, right? I mean, all sitting there and raking in those earnings. But Rahul, good morning once again. So, what are the pockets where you see value now? Because anything and everything has been running up. But we had this patch, this volatile phase where a lot of stocks corrected as well. Where do you see the opportunities in the market?
So I think let's go contra, right? I think, defense had a good run. It had a bit of a correction, but I think there could be some value emerging in defense stocks like Mazgaon, for example. I think that looks interesting. I think chemicals as a space, it had a dramatic start to the lockdown, if you remember. These stocks went up multiple times, not in percentages, but then you've had a 3-year price and time correction. And I think from our brokerage perspective, I think we do see value emerging in names like Galaxy Surfactants and Fine Organics and Rosari Biotech, I think from the smaller ones. So I think chemicals is an interesting one to potentially play. I know even though the finance minister has scaled back on her own investments in terms of capital expenditure going into next year, and road construction hasn't been as much as we would have expected from the NHAI, I think a lot of this may correct itself post the budget. Whenever they present the next budget in July or August. Cement could potentially, I think, because it's been a little out of flavor with these entire talk of price corrections and all of that sequentially, I think that could also be an interesting sector. So I think there are definitely pockets of the market, you know, when you look at, say, some defense stocks, chemicals, and cement, where not entirely in flavor completely, but not a bad time to start going contrarian in some of these names.
Interesting, Rahul. You know, the sector that was actually a big underperformer in the past fiscal was the banking names. And the Nifty banks returns, you know, was much lower than either you look at the frontline Nifty or you look even at the broader markets. Do you think FY25 will be the year for the banks to come back? Point number one. And also we have a BofA Securities note earlier today that says that they still believe that PSU banks can surprise. Last year, the PSU banks did much better than the private sector names. How are you all placed out there?
So, Nigel, I think the valuations are not demanding. I think if you look at the top private sector banks in the country, you know, whether you look at HDFC, ICICI, Axis, IndusInd, Kotak, they'll all be coming to you between 1.5 to 2.2 times FY26 price to book. And all of these guys will probably give you about a 15 to 20% kind of growth. You know, the ROAs would be in the range of between, say, 1.5 to 2.5%. On that, if you looked at the credit growth numbers that came out last week, ex-HDFC as well, the credit growth was about 16.5%, which was remarkable.
Yes.
You know, you had agri, you had retail, all growing at about 18-20%, services growing at about 20%. So I think credit growth's all right. I think for most of the banking names that I spoke about, and even some of the mid-cap names, I think there is a case for the cost-to-income ratio in a lot of these banks, including mid-caps, to come down by about 200-300 basis points, which would actually aid 18-20% kind of profitable growth on the bottom line. I don't think asset quality is a major concern right now. You know, people spoke about retail asset quality emerging, but going back to the point I was making to Prashant that, you know, if the Nifty was to go back to, you know, sort of where I think it can go to, it can't do it without the banks.
Yes.
It's just not possible. And let's not forget, in the middle of this year, you have a very big inflow coming in from the JP Morgan bond index as well. So it's very possible that it finds its way into banks as well. So I think, like I was saying, in terms of chemicals or, you know, some of the other stocks that have corrected, I think Bank Nifty is a good place to come into. And you can extend that to NBFCs or gold finance. I mean, Muthoot is a name we've been pushing for a while now. I think, you know, a 5% ROA business, 20% return on equity coming to you at what, 2.1, 2.2 times, not too demanding, I think. So there is value, definitely. I think it's been a consolidating phase, but I'd definitely be overweight on the sector.
What about a comment on PSU banking names that did very well? You would rather prefer the private names, or do you believe that it has enough momentum?
Well, I remember when State Bank of India was about 450, 500 rupees. I think I was on your sister channel and I was making a point that it had no business being there. I mean, it was so depressed. And even today, I think if you look at the valuation differential between an SBI and the leading private sector banks, I think it must be about 40 to 45%. You know, we're not sitting in an age where infra NPAs and, you know, telecom NPAs are there, those corporate NPAs. That's the thing of the past. If I reverse the question and ask you, Nigel, can you give me one corporate that you think is going to go defunct today? You'll probably struggle to find it. So I don't understand why this discount needs to persist. You know, I do understand that, you know, these banks are perceived to not be run as well or more as efficiently as private sector banks. But I think Mr. Khara and his predecessors have done a remarkable job. I think that would hold out for a Bank of Baroda as well, barring that one glitch that they had on the digital side. Now, will they outperform to that extent? I don't know. But would I still be a buyer in SBI today? Coincidentally, it's our, you know, this morning after our morning meeting, we've just put it out as our idea of the day for our clients. So, you know, I'd definitely be a buyer in SBI even at this price.
All right. You know, Hindustan Copper, if you can have, I think we pointed that out at the right of the word go. It started at 280. 280 is the open on Hindustan Copper. Stock's almost at 300. So it's already kind of, it's been what, a few minutes since markets have been trading, but look at that. That's, by the way, also got humongous volumes, head and shoulders above the number 2 stock volume-wise, which is Adani Total. Volume-led gainers is what I'm talking about. The other one is MOIL. So these, you know, the theme is PSUs, but the theme also is metals and mining, right? MOIL is the other one, which has got 5% on it now, 292 on manganese ore. And it's got decent-sized volumes for this point in the day. As well. Do you track any of them, Rahul?
Not actively, Prashant, but I think it's a proxy to China in many ways. And I think if that's the call that you're taking, the China is out of the woods and it's going to probably grow at about 6 to 7% for the next half a decade or so, then these become interesting bets. But no active coverage on these, so no specific.
You know, I read something interesting with regards to so Hindustan Copper, of course, is the only pure play copper. The others are refiners, etc. The copper play is Hindustan Copper. And we've, of course, all discussed how this push to renewable will need so many transmission lines, and copper, of course, is going to be a big beneficiary of that. Apparently, with this AI boost, with these big supercomputers and big data centers, guess which is the one commodity which benefits, which is it's once again copper. So Microsoft and OpenAI are building a $100 billion data center. So there was a piece which kind of talked about, I mean, how much copper you'd require for a project like that.
Incidentally, there is another stock, and I forget the name. I read about it on Bloomberg this morning, which has actually hit $100 billion of valuation in AI over the weekend. And that's probably, a lot of it is probably going to happen incrementally from here.
So you can buy AI stocks or you can buy copper.
But you know, the one thing that people don't realize is that despite these stocks hitting kind of market caps that they are, they're not out of whack in terms of valuations. I mean, I don't know how many of your viewers would know that for the market cap that Nvidia has captured on a 1 year forward, it's only trading at 27, 28 times. It is remarkable for a company. Just it's basically trailing earnings, right? The kind of earnings. So, you think intuitively that, oh my God,
you're talking about billions and trillions.
Absolutely,
So
the kind of growth that you're seeing, and it ties into something like a Dixon Technologies. I don't know if you remember when Dixon's never been more than a 45 PE stock. And it's remarkable because it keeps growing its EPS by 40-50% every year. So then you're okay giving those valuations for a 40-45% return on equity, return on capital employed company. But few and far between, I say.
Actually, it's interesting you point that out, because last week Amazon spent about $2.7 billion in the AI startup Anthropic, right? And together Amazon has put almost $4 billion. So large tech companies globally are spending big money in generative AI particularly. Now in India, there are a lot of companies that are doing work in generative AI, but in the companies that you track, anything specific that you like?
I wouldn't be able to put my finger on it because I don't think our large cap companies are doing enough in that space. And I don't think even if they wanted to do it, they could do it organically. I think it'll have to be done inorganically. I think they'll have to buy that talent. They'll have to buy those assets. They have the money to do it, but I think incrementally, that could be one big area where growth comes from, because traditional IT services in India, I think it's at a 5% kind of growth at a pivot. In a good year, that probably goes to 7-8%. In a bad year, it comes down to 1-2%. But if you're able to buy growth, say something like what Accenture did, right? If you look at Accenture's numbers, the organic growth is actually -1%. But because he's included his acquisitions there, he's been able to give you a positive number. So I think this can be bought. It need not necessarily be homegrown. But I don't know of a major way to play this direct listed equities in India just yet.
What about names like, say, Persistent Systems? Because, they did mention how they are looking to acquire companies in various spaces, generative AI, consumer tech, which is big now. So any of these names that you would like?
So Persistent has been a remarkable story. I think it went into the lockdown at a certain price and it came out of the lockdown some 6-7 times. And obviously the entire operating metric for Persistent changed between FY 15 to 20 and what it has done post FY 20. I think in terms of earnings CAGR also, it's probably been one of the best in terms of the IT services sector. But I think, Sonia, it's a very interesting point you make. Because for a lot of these mid-cap or larger mid-cap companies that are knocking on the doors to become large-cap companies, this is their competitive advantage, right? So would I buy a Persistent today in the hope of the future? I'm not sure, because valuations are very expensive. I think it's almost 8 or 9 standard deviation over a 10-year mean. But that again takes into fact that there was a depressed phase of earnings. But I think overall on IT services, we are cautious right now. But if these guys were to be acquisitive in the right way, then, you never know.
All right, Rahul, always a pleasure talking to you. Thanks so much for stopping by and giving us your take on the markets and how you see things shaping up as well.
Thank you, and wish you guys all the very best for the new financial year, to your entire team as well.
To you as well as your entire team. Thanks a lot, Rahul. Well, let's move on then, and let's get our first corporate on the show, Hatsun Agro, to discuss more about the company's business and how things are shaping up. We're joined by Mr. R.G. Chandramogan, the chairman of Hatsun Agro, who joins us on the show. Hi, sir. Good morning, and wishing you a good start to the year and hoping FY25 is an absolute star for you as well as your team. Well, let's get a couple of details out of the way then. For FY25, what kind of a volume growth are you factoring in? And also your margins, well, they are holding around 11.5% odd. Do you expect to see a better margin number in the coming fiscal, say an improvement of around 150, 200 basis points?
We can expect 150 basis point, we can expect it. But actually the base is now set. Actually the capacity utilization is also better in all divisions. And the milk arrivals have improved in the last 7-8 months. And the inflation is constrained. So there won't be any issue for us to grow in the coming year without any difficulty. Margins are likely to improve, sales are also likely to improve.
Right. You want to put a number to that, sir? You're saying margins can improve by around 150 basis points. Since your utilization levels are moving up, what kind of volume growth can we see?
Volume growth, as there is no inflation, the volume growth, what we are expecting is somewhere around 15% we can expect.
15% volume growth is what you're expecting. Okay, that is for which year? This is for FY25, right?
FY25 versus 23-24.
Okay, FY25, got it. Can you tell us what is you spoke about the volume growth of 15%, but in terms of margins in FY25, what are you looking at? And overall on the top line growth as well, what is your, what is your expectation?
The top line growth of 15% and on the bottom line, 1-1.5% increase is possible. Because actually we have got enough stock of material to just go through the season. And last year before we had the raw material prices out of control. Now everything is under control and we have got enough stock to manage. There is no issue for us to manage.
Okay, by the way, just take a look at the market. Almost a 200-point rally is what we're seeing on the Nifty right now. It's a big move this morning. The sensex is now up almost 600 points and it's a manic move that we're seeing. The Nifty has once again hit record highs, crossing its earlier level. Remember, the earlier record high was 22,526 and now the Nifty has very, comfortably crossed that level. We, of course, had a couple of weeks of volatile phase where a lot of people were talking about a 5-10% correction. None of that played out. The Nifty sort of climbed every wall of worry. Once again, sensex and the Nifty at all-time highs. So begun on a very strong note. But Mr. Chandramohan, if you can just tell us a little more about, what is the outlook on the ice cream business going forward over the next couple of months? What are you looking at in terms of big trends?
The ice cream trend is very positive. This year, probably the temperature is also likely to be hotter and better. And last year, probably the school holidays and other things also clashed. And holidays were just balancing out after COVID. Now the holidays are starting by April 7th. The season should be much better, in my opinion. But we have to progressively see by about 15th of April. Trend seems to be very positive.
So hi, good morning. Prashant here. You talk about summers and what comes to one's mind is ice creams. Could you give us a qualitative sense of how that business is likely to pan out? And, what's the lay of the land in terms of competitive intensity? Lots of newer brands, right? New age brands. Some are priced at a very premium end of the market. So we see a fair bit of advertising there. But overall, can you give us a sense?
In fact, probably ice cream is likely to grow much faster in the summer season. And also, not only ice cream, probably we also have our curd division, which is likely to do better in the summer. Summer is suitable for both the commodities, that is ice cream as well as curd. And we expect good momentum in both, as a matter of fact. This will be for the future for us.
Got it. All right. Well, sir, what about debt repayment plans? I think the last recorded debt number is around 1,600 crores odd. You could correct me on that number. By the end of this fiscal, that's FY25, what is the number likely to look like?
Sorry, give me again.
The debt number, the last recorded number, I think it's close to around 1,583 crores or thereabouts, close to 1,600 crores. In the coming year, what kind of repayment are you looking at?
Debt will be reducing by June end because of the consumption that we are likely to have and also the demand for the commodities. Debt is likely to come down by June quarter. Right now, almost the same thing is maintained.
So by June quarter, it comes down to sub 1,000 crores?
Maybe 1,300, 1,200 is possible.
1,300. Okay, it comes down by, so that'll be nearly 300 to 400 crores lower in comparison to the number that we last have. And by the end of the year, what does it go to? FY25, FY26. I recall you telling us that in the next few years, you're expecting the debt to come down to sub 500 crores. So by when?
Around 2025 June, you can expect the debt to come down to 500.
2025.
Yeah, that's right.
Okay. Can you tell us a little bit about competition? I mean, the Amul management is getting very aggressive right now, and a lot of other brands in this space, a lot of newer brands have come through as well, new age brands rather. How are you competing and how are you sort of navigating this space right now?
Different products we compete with, ice cream as well as milk and curd and all that. And we have our own profile, and probably technology-wise, we have made a very good investment in ice cream. The type of products what we make is very unique in the market. So that is giving an advantage for us. We have made heavy investments on extruded technology, and the latest plant of ours in Hyderabad is able to churn it out. And we are also able to get a premium out of it. So our growth is good, and probably we expect it to be better in the coming summer.
All right, we leave it at that, sir. Thanks a lot for joining in and giving us your thoughts on the business as well as the way forward. By the way, don't lose sight of what's happening in the market. It's a phenomenal move that we're seeing right now. The Nifty is now at the highest point of trade and at a record high, by the way, in case you missed that. The Bank Nifty is also up almost about 1%, but the mid-cap index rally is quite impressive. 600-point rally on the mid-cap index as we speak. So the market has got its entire mojo back. I think the market needed some rest as well. So those 2 long weekends really helped. And now we're come back in full swing. Let's take a quick break. On the other side of the break, we'll connect with Gangadi Madhukar Reddy, the MD and CEO of MedPlus Health Services, as the board has decided not to proceed with fundraising. Later, we'll also have Ramani Dati, who's the CFO of Team Lease Services, to put focus on hiring trends. Stay tuned.
Co-presented by
Welcome back. Well, data from Finos shows that IT hiring mandates in February has jumped 50% month on month and up 33% compared to December. In fact, even Naukri Jobs Peak Index shows picking up in IT hiring for 2 consecutive months. To discuss more on this, we have Ramani Dati, the CFO of Team Lease Services. Ramani, hi, good morning, and thanks a lot for joining in. You know, it's interesting to see that IT hiring is coming back. So can you tell us a little bit about, the trends? Is there a genuine pickup that we're seeing in IT hiring, or is it just a 1-2 month phenomenon?
Yeah. I think it will be early to comment whether to say whether the IT hiring is fully back, because as of now we have started seeing demand coming only in very small numbers and also with very few companies. And in terms of volume as well, it's not even 10% of the hiring that what we used to do about 1 or 2 years back. So we would say that maybe 1 more quarter we need to see the trend to see whether the hiring has really picked up or not. GCCs continue to hire in good volumes and numbers. So there we are seeing good number of hirings happening across the spectrum, whereas Indian IT services are still going slow on overall hiring.
Ma'am, hi, morning. Prashant here. Could you quantify that IT hiring? What's been the growth? And GCC, what's been, I mean, is that more than offsetting? That's a question we've come back to over the last couple of quarters, because GCC as a segment has been doing very well. Does that offset in a meaningful way the loss in momentum on the IT side?
Not really, because the quantum of hiring that happens in IT services is much higher. It's almost 3x of what we are seeing as GCC hiring currently. But the thing is, GCCs are hiring at higher skill set level and at higher salaries, more of niche skills and above 4 to 8 year experience. So that's the bracket where the maximum hirings are happening. However, the entry level and mid-level hirings, which typically used to happen at volume in IT services, they're yet to pick up. And also whatever hiring that we are seeing in IT services front right now are more of backfilling of the attrition, which they have postponed for the past few quarters. So these are not new hirings so far, going by the trend. Many of them are still backfillings of the attrition. Whereas GCCs, all of them are new positions. So this phenomena will continue, with GCCs contributing to a higher share of hiring for the next few quarters. So that would continue. And we have to see one more quarter for the pickup in IT service hiring.
Okay, all right. Hi, Ramani. Good morning and good to see you in. So as you're saying, is there is some sign of improvement, but you'll have to wait for another quarter to confirm that, yes, there is a lot of improvement. Got that. I wanted your take on both the parts of the business, that's the specialized staffing as well as the general staffing. Now, on specialized staffing, you recorded, I think, a double-digit growth after 6 quarters. Are you seeing that sort of a pace being maintained? Point number one. And on the general staffing, what about ahead of elections? Do we normally see some kind of an uptake in this part of the business as well?
Yeah. Firstly, on specialized staffing, last quarter, so there is a one-off large hiring and one specific client we did. Because of that, there is a double-digit growth. Otherwise, it would be more or less stagnant for 1 or 2 quarters more. And we are having good discussions in terms of hirings, that hirings might get picked up after Q1. But I want to see, as I mentioned, so we would like to see one more quarter before we comment on whether there is a real pickup or not. Coming to general staffing, last quarter, BFSI, the amount of hiring in BFSI was little slow because of RBI restrictions on unsecured loans and the recovery agents, those kind of hirings. However, now we have seen the recovery happening across other segments. Q4, we are expecting 10,000 plus net headcount addition in general staffing. And even for coming quarters also, we are very bullish in terms of the overall hiring numbers. And in terms of, specific to your question on whether the pre-election has any kind of impact, in the past we didn't had. So we usually maintain a similar trend across the quarters.
Okay. Can you tell us a little more about BFSI hiring? I mean, it has been muted for the last couple of quarters. And are there any signs of a ramp up that you're seeing in the BFSI sector at all in terms of hiring?
Yeah. BFSI is still slow because last 2 years, it is the highest sector contributing in terms of the headcount and volume for us. Whereas Q3, because of the reasons I mentioned, RBI being more cautious on the hiring, especially on the unsecured segment where we have a higher exposure. So that to some extent has impacted the BFSI volume hiring. And even Q4, there is a slight impact, but the recovery has started in Feb, in the month of Feb.
Okay, so that is on the BFSI space. Can you tell us, there are other sectors, right? There's oil and gas, pharma, FMCG. There was decent hiring that we saw in the month of February, but any of these spaces seeing disproportionate gains this month, in the month of March, and what is the expectation over the next few months in terms of hiring in these sectors?
Yeah, I wouldn't say there is any kind of disproportionate volume hiring in any of the specific sectors, but we are seeing good momentum getting picked up, specific to manufacturing, pharma, engineering, industrial. So these are the segments which we are seeing an uptick compared to last couple of years. We are seeing a good volume of hiring coming back.
Okay, all right.
And all the other segments, be it FMCG, FMCD, so they continue to maintain the same kind of momentum what we have been seeing for the past few quarters.
Okay, all right. Ramani, final question before we let you go. Then you've told us in the past that unless IT hiring picks up full throttle, it'll be difficult for you to get to that 2% odd mark in terms of margins. How far away will you be from that particular mark? If you could give us a broad guidance in the coming year.
I mean, till the time we are certain about the IT recovery, it's very difficult to give any kind of indication on margin expansion. So with the operating leverage in general staffing and the pickup in HR services, we are confident of margin expansion by few basis points, quarter on quarter. However, going back to the 2% EBITDA margin, which we have achieved just before COVID, for us to get back there, the IT recovery is extremely important.
Ramani, great to speak with you as always. Thank you very much for joining us and appreciate you taking out the time and speaking with us here. Thank you very much. That's Team Leads, the management telling us that IT hiring, which is of course the the big sort of growth driver, which has been the big growth driver over the last many years, that continues to slack. Maybe a quarter more is what they said, for things to pick up a little bit more. Stocks at about 2,800 plus, about 3% higher. The next management on the show is MedPlus Health Services. Now, the last, this of course happened about a month and a half back, has deferred fundraising plans. It's also deferred its diagnostic division expansion for the time being. Well, let's get more details on this. We have Mr. Gangadi Madhukar Reddy, Managing Director and CEO at MedPlus Health Services, with us. Mr. Reddy, great to have you with us here. Good morning. It's always good to speak with you, sir. Prashant this side. You know, before I get to the QIP and the diagnostics business, etc., I was reading a note. This was, I think, there was a conference here in Mumbai run by Investec, where I think you were there. And, you know, what I understand is there was a fair bit of conversation around your sort of a generic business, right? Could you talk to us a little bit about that? That's you know, what's the scale and scope of it? You know, on the pharmacy side, what percentage of products by value that you're selling are these generics? And at a net level, will this be a big revenue sort of boost, or because these are generics, this essentially means lower profit margins? Go on, sir.
Sure. So anyway, before I even get to how we are doing, you know, I'd like to tell you that this process of genericization has actually been happening for a while. You know, as you all know, you know, 80-85% of what we sell, right? I'm sure it is true for the market too, but I can only speak for ourselves. 85% of what we sell today are all generics. They are just Me Too products, and they're sold by different brands. Right? There's absolutely no difference in any of these products. If you actually look at it, it is less than 800 products, 800 actual molecules, which account for nearly 85% of our overall sales. Now, these are being sold under different names. You know, for the longest time, you know, customers did not know that these were all different. These are all the same. That has now changed, you know, quite significantly. A lot of people know about it, and a lot of people are, you know, the only reason that why they would pick one over the other is either because the doctor has recommended it, or because they're not too sure about the quality of the product which is out there, right? So that has been on. So the stage was set for someone to come in and basically say, hey, you know, I'm giving you the same product, and you can trust us on the quality. And as long as, you know, the quality is good, as long as you can trust us, you can actually pick it up, because we don't have any marketing or any other expenses. We can actually give you a huge discount. And the discount we offer is between 50 to 80%. So that has been resonating. I mean, the stage was set, we launched it, it's doing very well. To talk about the numbers, you know, given that we have just closed our quarter, I'll only tell you about what happened last before I...
Mr. Reddy, just for our viewers, so these are MedPlus generics. So generics under the brand MedPlus, right? This is the differentiation as compared to other labels who are also selling generics. But this is your own brand, which you're selling at a big discount to some of these other labels, which are also generics. That's the offering here, right?
I just want to make one distinct clarification. Everything in India is generic.
Of course.
It doesn't matter which company sells it. You know, some say it is branded generic, some say it is generic, but everything is generic, right?
Yeah.
So now it is going under the MedPlus name. Yeah.
Yeah. So you were getting numbers.
50% discount compared to the brands.
50 to 80% discount compared to the other brands. Okay. So you were getting to numbers. What does this mean at an overall level?
See, volume-wise, we're, you know, according to what we basically said in the last quarter, we were at around 12 to 13% of the overall volume, right? So if you look at the medicines only, it is more than 15% of all the medicines which we sell today in our stores is MedPlus.
Okay. No, so at a profit, but these are being sold at a bigger discount. Yeah.
We actually make more money on these. It doesn't matter what the discount is. You know, while the top line realization is slightly lower because on an earlier price of 100 rupees MRP, we would give a 17% discount or 18 overall average discount, and we would realize 83 or 82 rupees. Today, we realize maybe around 40 to 45 rupees based on the overall discount. But the net realization, despite the fact that it is much lesser top line, is actually better in our own brand.
Okay, 15% of all the medicines that you sell is MedPlus generic now. That's the first thing.
Yes.
And you're saying this is these are at an aggregate level. This is the net realizations are higher as compared to selling other labeled products, even though the top line is much lower.
That's it.
And what's the aim? 15% goes to what, by when, and how fast is this ramp up happening?
See, it'll all depend on how ready the market is and all. We're just still testing it out. We are advertising it. We're talking about it and all. There's going to be some early adopters who have actually come in. The others are going to follow at a later date, the consumers. And on our behalf, we'll basically continue to educate the market. It's very difficult for me to tell you, Prashant, because we don't know. Honestly, this has not been done in the country in the past. I'm hoping that our competitors, when they actually also come in and launch the same thing, they'll validate our model even further, and more people will shift towards the generic side.
Okay, Mr. Reddy, hi, good morning. I want to talk a little more about the diagnostics business because there are definitely some challenges there. You folks at MedPlus have decided to defer your expansion plans in the diagnostics business. Can you tell us a little bit about what are the challenges that you're facing? Is it just a 1-2 quarter thing, or do you think it could be long drawn out?
See, diagnostics, as I've said in the past, is a completely new model. It's a majorly disruptive kind of model, works on a different level and all. It is extremely, let us say, sensitive to the number of subscribers. We wanted a certain number of subscribers by the end of last quarter and all. We didn't get those. We still think we're a little way away, maybe 3-4 quarters away. So we want to make sure that we get those numbers before we actually launch it in other places. But as a concept and as a product itself, it has been taken up very well. There is some delay. That's all I can say. But definitely the model works beautifully.
So you said on the subscriber issue, there is some delay that you're facing, but also on the pricing, are you seeing any kind of competition pickup? Because some of your peers, in this space, at least incumbents like Metropolis, etc., have raised prices recently, or in the past 1 year at least. What is the pricing dynamics like in the diagnostic space currently?
Metropolis is not a competitor, neither is Dr. Lal's to us. We are a fully integrated center which has radiology and everything else. So I would say the closest competitor would be someone like a Vijay or someone like that who's there in Hyderabad. So for us, the pricing or increasing or whatever of Metropolis will only affect us will only affect us positively, right? We are a value player. We give a 75% discount. We are already much lower than them, and if they decide to actually increase their price, then more customers will come to us. That has no effect on us at all.
Note at that point, Mr. Reddy, what about your QIP plans? You said you're thinking of raising some money by the QIP route, and that's been deferred. Tell us more.
Yeah. No, that's right. That's right. See, we really did not require too much money on the pharmacy side. Pharmacy is a self-sustaining model right now. We're growing nicely. We wanted to go and get some money to expand our diagnostic centers fast. But given the fact where we are in the subscription numbers and all, we decided that we'll actually wait for a while. Hence, to remove that doubt or whatever, we just withdrew it.
Okay, all right. So, got it. I just wanted to come back to the business, right? Can you tell us a little bit about the margin picture, overall margin picture for the company? What are you looking at? I mean, in Q3, your margins were at about 6.5%. Is there any scope to rise further?
We are in a silent period. I really don't want to talk about it. Things are going according to plan, I would say. That's all.
Okay. And your new store margins, just trying to understand on the new stores in terms of timeline, etc. When can one expect some break even? If you can just give us a trend on that. I don't want exact numbers, but just some ballpark, ballpark figures.
No, I'll just give you a general thing out there. Typically, 50-60% of our stores break even in 3 months at the operational level, and around 75-80% break even in 6 months. That's the usual thing. It goes up or down based on the season and all that. But we have been tracking true to that. Nothing has really changed for us. The stores, though, become fully, they deliver the full EBITDA only at the end of 2 years. So in the process of ramp up, you'll always see a drag on the EBITDA. It'll actually not be a loss, but let's say the store level EBITDA is 10% at the end of 2 years. Half of them, more than 50-60%, 45% of the stores are below that. So you're going to see a slight, I would say, drag because these would be delivering a lesser EBITDA. That's all.
So in terms of number of stores, your plan was to add 600 stores in FY24. Are you on track to doing that? And what about FY25? What's the guidance?
No, as we said in the last call, yes, we are on track for that. Yes, we will most likely end up doing 600 stores, as I said in the last call again.
All right, Mr. Reddy, we'll let you go on that note. Thanks a lot for joining in. Appreciate your time here on CNBC-TV18. Well, let's take it straight to Mitesh Thakkar, who's joining in now to tell us about the market, which is definitely the biggest headline of the morning. Spectacular moves coming in on the market today, 200 points higher. The sensex is now back above 74,200 and the nifty comfortably around 22,500. Mitesh, hi, welcome back. It's been really strong. I mean, the growth that we're seeing in the market so far, at least the recovery that we've seen compared to, what it was a couple of weeks ago. Where do you think this momentum is coming from and what are the stocks you're looking at?
So I think one, we talked about the fact that market should get past the earlier highs in a couple of days. We are right there actually. Didn't expect it today morning, so early in the day. But I think, getting past 22,530 should suggest a test of 22,800. So that strength is there. The good thing is that the strength is well distributed. So you have banks, you have metals, you have auto names participating nicely into the opening. I think looks like that the breakout should happen. If not today, then maximum by tomorrow. And the idea should be to trade continuously on the long side. For the timing, I have a buy on Steel Authority. Keep a stop below 135. Look for targets of 145. And the other buy is Glenmark Pharma, which I would recommend buying once the stock starts getting past 980, which is today's high. Buy then with a stop at 960 for targets of 1,000.
Yeah, got that, Mitesh. Just one name before we take a break. Sterlite Technologies, right? If you can have that up. That's a large move coming through. 8.5% pop there. It's been sort of declining for a while. The high recently was 150 from 150 Thursday. It left off at about 110 and that's moved up 10 rupees this morning. And it's got large volumes as well. Jindal SAW is another one which was not there in the mix, I think, in the morning. 6% on Jindal SAW, 460. Some of the others, of course, we've been discussing as we go along. So there's a fair bit happening. We'll come back to some of these names in detail. We'll take a break here. We put the focus once again on the commodity space. Gold making a new high. Manisha is going to be here with more on commodities. Stay with us.
Bharti Hexacom Limited.
Welcome back. 180 points on the Nifty is what we have. 22,500 plus. We made a new all-time high, of course, just a couple of minutes back. But gold is the one, the other commodity, the other asset class, which of course also is making newer highs. Manisha is here with some focus on that. Manisha, morning again.
Thank you for that, Prashant. Well, yes, this is absolutely not economics textbook where you have equities running up and gold doing so well and even the dollar index trading at a one-month highs and Bitcoins at around all-time highs as well. But this is quite a different scenario that we are working with right now, and we have seen a lot of hot money, smart money move in case of gold. We're looking at an all-time highs right now at $22.50 an ounce, $22.60 at this count. So every time I write those graphics, you've seen further gains come in for gold. So this is on your screen an all-time high that we are seeing in case of gold prices. After gaining 10% in the first quarter of 2024, the second quarter has started on an all-time high note as well. When you look at the prices itself, though, are on the higher side. There are expectations of Fed rate cut in June that stands at around 71 to 75%. Very strong support because of that. And then you have seen strong physical buying from Chinese households, Turkey as well. The global central banks bought record amount of gold at around 1,100 tons in 2022, almost 1,000 tons in 2023. And in 24, the first quarter has seen a very strong buying continuing for many of these banks as well. Even RBI has been buying. So at this point in time, India gold reserves stand at 817 tons. So that's a huge high for us as well. If you look at the gold ETF buying, that has put in recorded net inflows for a third straight week also. And then strong buying continuing in case of various areas, whether it's gold bonds, ETFs, mutual funds, has been quite supportive. If you look at the gold prices on where we started this year, it was on the higher side. $2,000 per ounce has been holding now. 1st of Jan, the prices were at 2058. We saw a huge amount of profit taking, but 1990 as a support level has held. And today we've seen 2250, 2260 as well. If you look at the forward market cues now, the forecast is of even higher prices from here. We've seen that happen from the Wall Street banks and brokerages. They've been revising their forecast on the higher side constantly. So Citi, I spoke to them recently and they said $2,300 an ounce is what they're looking at for gold prices to average. 2,300 is what ANZ and Saxo Bank also believe that the gold prices will see by the time we are hitting second half there. Exim Australia also and JP Morgan also are talking about 2,300. So we're just about $40 away from those kind of levels. Bank of America has been quite bullish. They've been talking about 2,500 once 2,300 is crosses on the higher side there. And we've seen 2,500 of a level come in from JP Morgan as well. They believe 2,600, 2,700 also is a possibility here. So we're talking about levels, another $300 to $400 from here is what the markets are forecasting on the higher side for the street.
Wow, and on the Indian price, it is, you said, 67,500, right? Per 10
yeah,
grams?
69,000 is what I saw the markets open at. So 70,000 is what the street believes here. And by Diwali, 72, 75, I mean, take your pick. When it goes on the higher side, people mostly put in higher margins there.
Oh, wow. All right. And according to the World Gold Council, actually, central banks bought 1,037 tons of gold in 2023,
yes,
which was the second straight year that central banks added more than 1,000 tons to their reserves. So as Manisha was saying, big buying coming in from global central banks. Thanks a lot, Manisha, for that. Well, let's get back to our markets now. Prestige Estates is in focus. Sonal is here to give us the latest on that. Sonal, over to you.
Well, there's a lot of action which is happening in Prestige Estates. The fresh one being the company, through its subsidiary, entering into an agreement or a deal with Abu Dhabi Investment Authority and Kotak AIF for raising 2,001 crore rupees. The company says this is to bolster the growth that they've been seeing in their residential business already, and that is where they'll be using these funds for. They will be developing projects with gross development value of around 18,000 crore rupees across 4 cities. The 4 cities would be Bengaluru, Mumbai, Goa and NCR. The management had been indicating that they are expanding in the NCR, Goa and Mumbai region, and this is where this capital will be used.
Okay, all right. Sonal, thanks very much for that. Prestige up about 4%, as Sonal points out. PNB Housing Finance, of course, credit ratings being upgraded by 2 firms. We highlighted that earlier. Let's revisit with Abhishek. Abhishek.
Well, Prashant, to begin with, as you mentioned, there has been credit rating upgrades from 2 firms. So, CARE has upgraded the rating to AA plus from AA. The outlook is now revised to stable from positive. The rating upgrade is for various instruments like short and long-term bank loans, fixed deposits, commercial papers, NCDs, Tier 2 bonds, etc. So, ICRA has also upgraded the credit rating to ICRA AA plus from AA. The outlook has been revised to stable from positive. Now, Morgan Stanley has written on PNB Housing. They have an overweight rating and a target price of 970 per share. They say that 4Q is seasonally a strong quarter for an HFC with respect to, the loan growth as well as the asset quality, which actually sees an improvement on a seasonal basis. So valuation for PNB Housing is attractive at about 1 time price to book value FY25 and about 9 times price to earnings. Back to you.
All right, thanks a lot for that. So that's PNB Housing Finance. Lupin is also on our radar. Ekta is here to tell us more. Ekta, over to you.
Thanks for that. Well, Lupin has received the US FDA nod for the generic version of a drug, Aptium, in the US markets. Lupin is expected to be one of the first ANDA applicants for this, and it could be eligible for 180-day shared exclusivity in the US for this particular product. It is used for seizures. The market size is quite significant at around $354 million and is expected to be manufactured at the company's Pithampur facility. That's the reason you're seeing the stock higher today.
All right, Ekta, thanks very much for that. 130% higher on that one. We'll take a quick commercial break here. But what's the, we're talking about credit rating of PNB Housing, but what's the credit rating environment looking like in terms of upgrades, downgrades, which is the sectors which are going to be in focus as we enter F525? That's the question we'll try and answer with representatives from ICRA, Jitin Makar of ICRA and Somshekhar Vemuri of CRISIL Ratings as they put the focus on this aspect on the other side. Stay tuned.
Brought to you.
Welcome back. The market's doing just fine. Let's put the focus on credit ratings for India Inc. Into F525. Jitin Makar, Senior Vice President and Head of Credit Policy at ICRA is joining us, and so is Somsekhar Vemuri, Senior Director at CRISIL Ratings. Gentlemen, good morning. Great to have both of you here, Jitin and Som. Prashant, this side. Som, if I can start by sort of asking you, I was looking at, your upgrades to downgrades ratio for the second half, which is actually moderated a little bit, but still, as you in your report point out, remains pretty strong or elevated, as you put it. Can you start there, what you've seen in H2 of F524, and then take us into what your expectations are for F525?
Thanks, Prashant, and good morning. In H2 of fiscal 24, we saw 409 upgrades in our portfolio, vis-a-vis 228 downgrades. And that has translated into a credit ratio, which is nothing but the upgrades to downgrades ratio of 1.79 times. And this is a tad lower than what we saw in the first half of 1.91, in line with what we had outlined earlier. Primarily driven by the domestic demand and the government-led capex, domestic consumption and the government capex were the primary drivers for this, and sectors which clearly saw a lot of upgrades were the infra and infra-linked sectors, including construction, renewable power, road assets, and even real estate. The downgrades were a little bit higher on some of the export-linked sectors that included textiles and seafood, primarily because of the subdued global demand and higher cost inventory, which impacted profitability in some of the segments. Coming to the outlook for next fiscal 2025, we continue to have a positive credit quality outlook, and we expect upgrades to outpace the downgrades. And again, the primary reasons would be the steadfast domestic demand, the low corporate leverage levels that we have, as well as the tailwinds from the ongoing, as well as what we have seen in the past, the infrastructure build-out that the country has undertaken.
So just one point, when we talk about this upgrade-downgrade ratio, we're looking at the number of number of rating actions, right? Is there any way to sort of quantify this or qualify this as sort of value add or representation in the economy? This metric, which perhaps gives us a better idea of, we outlined some of the sectors where the bulk of the upgrades and bulk of the downgrades have happened. But if we were to sort of look at contribution to growth, would you say the number actually is, this number is even better as compared to the 1.79 that you pointed out?
So we also track something called as a debt-weighted credit ratio, where we don't look at just the number of companies where we saw upgrades or downgrades, but also the debt which is sitting on the balance sheet of the companies. And there the ratio came in at 1.28 times, somewhat lower than what we saw in the first half of this fiscal. But first half was more of an aberration, where we saw a few companies with very large debt that got upgraded. In the second half, there was no such skew. But nevertheless, in terms of even quantum, the quantum of upgrades to downgrades is also higher. Also, when I shared my outlook here, we use a framework called COIN framework, where we looked at 26 corporate sectors and 12 infrastructure sectors, and these together account for almost 72% of the rated debt in the companies, excluding the financial sector, and hence it is fairly representative. And what we do see is 21 out of the 26 sectors we have a strong to favorable credit quality outlook, and these account for almost 96% of the debt which we have where we undertaken the study.
Okay, Jatin, let me get you into the conversation as well. Sort of look ahead into F525. From an equity perspective, general chatter has for some time has been that we find ourselves, corporate India Inc., after all of the deleveraging, etc., which has happened, finds itself in the pink of health as we enter F525 as well. Maybe, this week we have the RBI meeting and nothing will happen, but the next step, whenever that happens, is going to be a cutting kind of a cycle. Hopefully, not just here, but globally as well. In that context, just sort of tell us what's the outlook for what you rate, the debt that you rate across sectors into FY25.
Yeah, hi Prashant. Good morning, everyone. Before I specifically answer the question that you've asked, Prashant, I'll just give you an additional context based on what we were seeing in FY24, and that again in the context of the larger period historical trend of the past 3 years. So FY24 indeed was a year where the upgrades outnumbered downgrades by a factor of 2. But there's another side to it, which is that FY24, at least what we were seeing, was that it was a year of normalization in terms of credit quality. By that, what I mean is that this was a year where we saw the reaffirmation rates, the rating reaffirmation rates to align with the historical average of around 80%, which means that 80% of the entities in our portfolio saw the ratings getting reaffirmed. And it was only in the 20% pie that we saw ratings change. And within that 20% pie where we saw a rating change, there were 2 upgrades for every downgrade. So this is unlike the situation which was there in FY22 and FY23 post the pandemic rebound, where industry-related factors were contributing to a big tailwind, and there were a lot of upgrades in FY22 and FY23 because of that. Now, coming to FY25, if you have to pick up a few sectors where trend lines may continue, so there's a recency effect relating to, say, the hospitality sector, which has been seeing a good uptick in FY23 and FY24, and we expect FY25 also to be a good year for the hospitality sector. So I think momentum should continue for the hospitality sector in FY25. And infrastructure sector, whether it is roads or railways or defense-related entities, they may see the benefits of their high order book to OI ratio, which is currently running anywhere between 2 to 3 times for many entities. So whether we talk about these conventional infrastructure pockets or the new age infrastructure segments like data centers, I think FY25 is again going to be a good year from a credit standpoint for these segments as well.
And on the flip side, Jatin, any sectors on the other side?
Yeah, on the other side, again, the export-oriented sectors are still not out of jail. We expect that the cut and polish diamond segment, which is again it's a labor-intensive segment, so there could be challenges on that aspect as well. Plus, we are seeing export momentum to be not as rosy as yet for other segments like the textile sector. There again, we expect sequentially the improvement to be there in FY25. But again, the kind of capacities and the fixed costs that many of the entities in these sectors have built up, that may take a while for the revenue growth to be at a level where the profitability returns to the FY22, FY23 levels. Other than this, agricultural commodities like tea, there again, there could be certain challenges there. And I mentioned about tea, cut and polish diamond sector, textiles. Some bit of sequential moderation would be there in the ferrous metals also. Not that the sector is going to be bursting at its seams, but we do expect that the debt by EBITDA ratio of this sector to trend towards 2.5, 3x times compared with the lows of 1x that it had seen in FY22.
Yeah, no, got that. You know, Som, on chemicals, which is, you've identified that as one of the sectors which are facing some headwinds. In the listed universe, we saw a very large player about a month ago seeing a rating downgrade. Could you talk to us about that particular space? I mean, could there be a turnaround in FY25 for the sector if you want to just sort of dig in a little deeper there?
So, as per a study, there were 4 sectors: specialty chemicals, agrochemicals, cotton spinners, and diamond polishers, where these were sectors which were facing headwinds. Given that they are largely aligned with what is the global macroeconomic conditions. What we are seeing is for 3 of them, barring diamond polishers, for the other 3, we are expecting a partial recovery of sorts in fiscal 25, even though it will still be subject to some of the pressure which was there, but it may ease a little bit. Having said that, all these 4 sectors do have fairly strong balance sheets, and hence from a credit quality outlook perspective, the outlook for vast number of companies in these sectors is likely to be stable to moderate.
Got that. What about real estate, Som? I mean, any specific trends there? I mean, that's one sector which is really compared to a couple of years back, I mean, actually, just a couple of years back, a complete turnaround, right? Sea change.
Yeah,
How is
clearly,
that
I think-
expected to hold out? Yeah.
Yeah, clearly, you're right. I mean, residential real estate sector is riding on buoyant consumer demand, and inventory levels are also at much, much lower levels compared to what you have highlighted. 2-3 years back, there used to be around 4 to 5 years of sales in major cities. Now it is trending more towards closer to 2.5 times, 2 years. So very clearly, residential real estate, the fortunes are much better, and it's amongst the sectors where we've seen more upgrades, and we continue to see buoyancy here. Commercial real estate continues to remain steady, in terms of credit quality outlook.
Jatin, any other sort of anything else which strikes out to you, which you'd like to highlight for our viewers as we head into 25?
Overall, we think that there are many sectors which have done well over the past 3 years, but are yet to see the post-pandemic path. So whether we look at cement or steel or automobiles, whether passenger vehicles or commercial vehicles, I think among one common thread that runs across these sectors is that they've done well over the past 3 years. But if you were to compare the performance of these sectors in terms of volume growth, with the anchor being FY19, which was the pre-pandemic year, then we would see that the progress or the growth that these sectors have seen in terms of volumes, it is yet to achieve that pre-pandemic path. Real estate sector has been one exception, in the sense that when we look at the CAGR since FY19 for real estate sales in terms of millions of square feet of residential real estate sale in the top 7 cities in India, that growth number would be anywhere in the vicinity of 12 to 15%, which on a CAGR basis is a very promising number. So yes, there are still several sectors where capacity expansion has been taking place, the likes of chemicals or steel or cement and the likes, so which means that over an extended time horizon, which would be in the next 3 to 5 years, these sectors should achieve that pre-pandemic path. It has been slow, but it should achieve over the medium term.
All right, we'll leave it there for now. Jatin and Som, great to speak with both of you here on CNBC-TV18 this morning. More green than red, as we say in market parlance, and generally looking pretty upbeat as we head into F525 on the credit rating side. So that's the word coming in from Crystal and Ikra. Market, Sonia, meanwhile, up 180 points.
Oh, absolutely. And big moves coming into the markets, right? Just wanted to talk about a couple of stocks that are doing very well. In terms of 52-week highs or record highs, Tata Steel is at a fresh 52-week high, so steel is coming back in a big way. Real estate stocks are picking up pace ferociously. So DLF, look at that. Fresh 52-week high, 7% higher on DLF this morning. So big moves in the real estate space. Some of these smaller names as well, like a Pashmina developers, also doing very well. And then you have aviation and hospitality. So Indian hotels, you have EIH, you have Interglobe Aviation, all sitting with big gains this morning. And something like an L&T also at a fresh 52-week high. So there is no dearth of, stocks that are moving around in a big way. But on that note, we will wind down with Bazaar. Thanks a lot for watching. Chartbusters up next. Stay tuned.
Bharti Hexacom